From Russia and Iran, Brent corrects to around $76 a barrel. Gold also hits a 3-month low as strong U.S. housing data and a firm dollar weigh down safe haven demand. A day after Indigo's record 500 aircraft order, Air India signs purchase agreements for 470 aircraft at the Paris Air Show in line with its ambitious fleet renewal and expansion strategy. The order includes over 200 aircraft from Boeing and Airbus. Paving the way for the HDFC Bank merger, the Competition Commission of India grants approval to HDFC to raise its stake in HDFC Life Insurance Company and HDFC Ergo General Insurance to above 50%. Prime Minister Modi meets key CEOs and thought leaders on his first day of his US visit. Also meets Tesla chief Elon Musk, who calls India a great place for solar energy investment and remains optimistic on announcing an investment in the not-too-distant future. Billionaire investor Ray Dalio also acknowledges India's potential and says the Prime Minister is a reformer with the ability to transform. And later on the show, today marks the 9th edition of the International Day of Yoga, which was first celebrated in 2015 after a UN General Assembly designation coinciding with the summer solstice. The day aims to increase awareness of the several benefits of yoga and is celebrated with great enthusiasm across the country. And while the Prime Minister will address the UN on this occasion later today, he also did address the nation earlier.
मुझे विश्वास है योग से हम अपने स्वास्थ्य को भी बेहतर बनाएंगे और इन संकल्पों को भी आत्मसात करेंगे। हमारा शारीरिक सामर्थ्य, हमारा मानसिक विस्तार, हमारी चेतना शक्ति, हमारी सामूहिक ऊर्जा विकसित भारत का आधार बनेंगे। इसी संकल्प के साथ आप सभी को योग दिवस की एक बार फिर बहुत बहुत शुभकामनाएं।
All right, that is Prime Minister Modi speaking to the nation on the International Day of Yoga. In fact, there's lots more planned in terms of celebrations. He's also going to be addressing the UN. So we're going to bring you all of that in just a bit. But for starters, let's take a look at how the global markets are really doing right now. We did get a weak handover from Wall Street. And on the back of that, you have pretty much all of the Asian markets which are trading with some cuts, all barring just the Nikkei markets right now. And what's looking the worst is clearly the Hong Kong market. So the Hang Seng is seeing the sharpest cut right now, almost 300 points over there, 1.4% gone on the Hong Kong market right at the start of the session. Taiwanese index around 0.2% in the red. You have the Kospi, which is trading with a half a percent cut. So, you know, across the board, it's quite a weak start. Nikkei is the only one which is managing to see some green, just around 0.25% in the green over there. Let's bring the SGX Nifty up for you as well. And it is indicating that the start for our own markets will be a little bit lower. So around 17 points is in the red is what we have. Remember, we saw that big recovery in the last hour of trade yesterday, but looks like the start for the session today could be a little bit lower. That's what's happening in Asia. But speaking of that, let's also listen to what Stephen Roach, former Morgan Stanley Asia chairman, had to say about the outlook for the Chinese economy. Here are his thoughts.
Chinese outlook has taken a surprisingly bad turn for the worse here, and the government's responding with sort of the traditional playbook of interest rate cuts, infrastructure spending, and you know we'll see if it works. I think the second half will probably be a little bit better. You know, there is a trade-off here between the cyclical stimulus measures that are going to be taken and the ongoing longer-term issues that China has with respect to growth, one of which is the ongoing conflict with the United States. But, you know, China's got an aging problem, it's got a productivity problem, and it's being driven more by ideology than markets right now.
All right, that is Stephen Roche talking about the China growth situation and some concerns that, have arisen on that front. But with that, let's also talk about the U.S. markets, because we did get Wall Street, which ended lower this after the extended weekend. So the S&P 500 saw a 20-point cut. The Dow was down around 250 points, so 0.7% in terms of a fall there as well. And the Nasdaq saw a 22-point cut at the close. The street actually now looks ahead to Fed Chair Jerome Powell's testimony before the Congress tonight. That is really the big cue that we're tracking as far as the global markets go. And we have Kate Rogers here to bring us a wrap of all of the action that really transpired on Wall Street. Kate.
Markets ending lower as stocks struggle to build on last week's gain. The Dow dropping around 245 points, and the S&P down about 0.5%, and the Nasdaq also in the red. USA Today publisher Gannett is suing Google, accusing it of violating U.S. antitrust law by monopolizing the online advertising market. In a statement, Gannett chairman and CEO Michael Reed said Google's monopoly is hurting, quote, publishers, readers, and everyone else. It's just the latest in a string of legal action against Google's ad business. The DOJ, EU, and UK all have pending investigations into the company. Rivian stock rising after the EV maker announced it would adopt Tesla's charging standard. The agreement will allow Rivian's EVs to use Tesla's superchargers across the U.S. and Canada as early as spring 2024 with its next generation of vehicles, including Tesla's charging plug. Rivian's announcement follows similar moves from Ford and General Motors in recent weeks. Shares of Rivian are up more than 5% today. That's what's happening in the U.S. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of that action from the U.S. markets. Actually, speaking of that, here's some opinion as well. The Fed Chair Jerome Powell's message to the markets was confused and confusing. That's the word coming in from Alliance's Chief Economic Advisor, Mohammad El-Arian, listening to his views on the Fed rate hike trajectory as well going forward.
So I called it confused and confusing. Confused because they said three things that are internally inconsistent. On the one hand, they increased the inflation forecast. They also increased the amount of hikes that they're anticipating. But on the other hand, they did not hike. So there was an inconsistent set of outcomes. Confusing, just look at the reactions in the marketplace. You have those who believe that this was a committee outcome. So it is what a committee would come out when the chair is trying to please everybody and you end up in the muddled middle. There are those who think that they are signaling a higher inflation target. And that those who think that they are making a mistake. And you saw the divergence in the performance of the equity market and the bond market because of that. So it is confusing and confused, and we're going to have to wait and see what happens next.
All right, that is the word coming in from Mohammad El-Arian, and that's what we're tracking as far as global market action and opinion goes. But let's talk about how all of the overnight cues that we just spoke about can impact our own markets and some of the individual stocks that you should have on your radar as well. Our research team is here with the trade setup. Sonal, Mangalam and Surbhi all join me now to prep you up for this trading session. Guys, a very good morning to all of you. Sonal, let me come to you first. We were just going through the global market setup, and that definitely is a bit negative.
It is. That's why U.S. markets, they were lower in trade, and this is after the Juneteenth holiday. They came back, and the rally has been reversed now. The Dow Jones was down 0.7%, S&P down 0.4%, and that is something that we are seeing in the Asian markets as well. They are lower after the weaker cues that we got from Wall Street. Hang Seng is down 1.4%, so the weakness continues there, and the SGX Nifty is indicating that the start for our own markets, well, that could be in the red, 17 points lower on this one. Now, if we talk about our own markets, the second half recovery actually led to Nifty closing at day's high yesterday, 61 points higher there. And mid-cap index also ended at a record high. It was the 7th consecutive session of gains for mid-cap index as well. IT stocks and Reliance Industry, they led to the gains that we saw on Nifty, and that is something that we'll be tracking as well. So now the resistance for Nifty is at 18,850 to 18,900 and support is at 18,700. Nifty Bank 2 recovered sharply, 421 points from the lows of the day to end at 43,767. Now the 20-day moving average of Nifty Bank is the immediate resistance here, so that is an important level to track. In terms of flows, we had DIA as net buying 1,972 crore rupees in cash, and similar amount was sold by the FIIs. So that is something we'll be tracking as well. But for today, looks like it could be a start in the negative.
Okay, a start in the negative, but let's see how things move from there. Sonal, thanks a lot for taking us through all of those cues. Surbhi is also here to take us through all of the individual stocks that we should track ahead of the market open today. Surbhi, take us through the list.
Good morning. So first on my radar is Shriram Finance. Now sources say that Piramal Enterprises is going to sell stake in the company. The next is Pidilite. The company is going to manufacture Litocol and 10x products from Italy in India. HDFC Life is also on my radar because the CCI approves acquisition of additional stake by HDFC in the company to over 50%. Shilpa Medicare, the company is going to consider a fundraise on June 23rd via a rights issue. And lastly, Avenue Supermarts, the VP of Buying and Merchandising has tendered his resignation effective July 1st.
Okay, Surbhi, thanks a lot for taking us through that entire list of stocks. Let's also talk about all of the cues from the futures and options space. Mangalam is here with that. Mangalam, we did get that rally and that recovery pretty much towards the end of the trading session. What should we watch this morning?
Well, it was a remarkable day of trade yesterday. In fact, we opened with a cut. Thereafter, we saw some cuts all the way to the tune of 17,660. And right from the support zone, we saw a big recovery. And the Nifty ended at the high point of trade. A large part of the last hour's rally was also on account of a couple of F&O related factors. It was the Nifty Bank as well as the Nifty Financial Services. Both those intraday charts come up for you side by side. And you see, there was a big rally. The Nifty Financial Services saw some short covering towards the end as well and ended above 19,500. And as a result of which, we saw the Nifty Bank do well as well. The other thing that really worked for us yesterday was the way the IT index was supporting. So towards the end, we also saw some purchase in large cap IT names. So all those factors took the Nifty once again closer to all-time highs. However, the important part to watch out for now will be the way flows move and how we navigate through the congestion of 18,850 to 18,900. The FIs yesterday sold, the DIIs bought. But remember, this has, this has been impacted by a lot of large trades that took place yesterday. So there were three major large trades: HDFC, AMC, Timken India, and Krishna Medical. So as a result of which, the flows picture has been slightly, confused, or rather, it includes all those large trades itself. So no directions coming in just based on those flows numbers. The FI has bought about 370 crores in index futures. That was more on account of short covering than long addition, and as a result of which, their longs are just at around that 52% mark. In terms of options, because the Nifty recovered from lows, all those guys who had written the 18,800 call had to cover their positions. So we had some call shedding out there, and 18,700 call writers as well were extremely active and unwound their positions because they were caught on the wrong side. But we did get a lot of put writing at 18,800, and that's positive because that's telling you that the Nifty support continues to move higher and continues to stay strong. So the Nifty support range largely between 18,650 to 18,700, congestion 18,850 to 18,900. For the Nifty Bank, 20-day moving average is a bit of a resistance, so that's something that we'll have to watch out for despite the recovery that we saw yesterday. Just a handful of stocks that I'll be keeping an eye out on. Hind Copper and BHEL have entered F&O ban, and out of F&O ban are Manappuram, Tata Chem as well as Z Entertainment Enterprises. So we'll watch out for all those counters.
All right, we will watch out for that. Mangalam, thanks a lot for taking us through all of those cues that you're looking at as well from the futures and options space. But with that, I also want to bring you a quick update from the aviation space. Of course, we were talking about the big Interglobe order yesterday, and now Air India has signed purchase agreements for 470 aircraft from Airbus and Boeing at the ongoing Paris Air Show. So in an attempt to increase its fleet, the Maharaja has ordered 250 Airbus aircraft and 220 Boeing jets as well. And Boeing says that this is its biggest order that we've seen in South Asia. So the aviation space really continues to be in focus. But let's also talk about the commodity space. Manisha joins us for an update on that front. Manisha, what are you looking at this morning?
Pavitra, thank you. I'm looking at the crude oil prices, which after losing a percentage point overnight have seen some buying come in right now. Well, the China crude imports have slipped in the month of May, and the stockpiles are at 2-year highs. So that's weighing onto the crude oil prices. Also, there is some dollar strength right now, and markets do believe that the China stimulus may not be enough to revive growth, and that is weighing on crude prices and various other industrial metals as well. But the street will watch out for the U.S. Fed Powell testimony today and tomorrow to understand on what the cues are for the rate hikes going forward from here. As I said, according to the crude oil prices, that's exactly what you have seen for the metal prices also. Iron ore has come off its 2-month highs. Copper is off its initial gains as well. The China rate cut, which is the first time in 10 months, is seen small at 10 basis points. And the markets are waiting for a larger liquidity injection. If that doesn't come, then you are looking at markets coming down yet again.
Okay, Manisha, thanks a lot for getting us all of that action from the commodity space. That is everything that we're looking at in terms of cues from the equities and commodity markets. But with that, it is time for a break on the show. When we come back, Prime Minister Narendra Modi lands in the United States and meets key CEOs and thought leaders. More on that when we come back.
Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say.
Welcome back. You're still tuned into Power Breakfast here on CNBC TV18, and let's talk about the Prime Minister's US visit now. On the first day of his state visit to the US, he met members of the Indian diaspora in New York who greeted him with vibrant celebrations, including music and folk dance performances. The Prime Minister also met key US CEOs and thought leaders, including Tesla chief Elon Musk, who believes that India is a great ground for solar energy investment, and he also remains optimistic of announcing an investment in the country very soon. The Prime Minister also met prominent investor Ray Dalio, physicist Neil deGrasse, as well as financial market analyst Nassim Nicholas Taleb. Here is what they had to say.
I think there's a tremendous amount of potential for all three pillars of the sustainable energy future. The three pillars being sustainable energy generation through solar and wind primarily, and obviously India is great for solar, the amount of land area you actually need to generate enough electricity to power India is very small. I believe it'd be probably 1 or 2% of the land area of India. So it's very doable. And then you need to pair that with stationary battery packs because the sun doesn't shine at night. And then you need electric vehicles. And then you have a sustainable energy future. And I think it will, the interesting thing people will find is that this is a lower cost way to go as well. That may surprise people. And we're also hopefully looking forward to bringing Starlink to India as well. So, you know, the Starlink internet, which I think can be incredibly helpful for sort of remote or rural villages where they perhaps either may have no access to internet or the internet is very expensive and slow. He did. Yes, I'm tentatively planning to visit India again next year.
Prime Minister Modi is a man whose time has come at the time that India's time has come. The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it and the popularity to transform it. So I think India and Prime Minister Modi are at a juncture in which there's going to create a tremendous opportunity, tremendous changes in India that are going to be really startling.
I connect with His Excellency the Prime Minister. We sat down, he mentioned anti-fragile, we spoke about bouncing back from adversity, and we spoke about essentially risk-taking. So it was wonderful, and I also commended India on the response to COVID and how, you know, India was very efficiently dealt with it, particularly with the food the distribution and all of that.
All right, those are some important snippets of, the thought leaders coming through after the meet with Prime Minister Modi. But with that, we are going to get into a short break. Up next, as we celebrate World Yoga Day today, we're going to get you some special tips on improving your body's health. All of this after this short break.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because
Welcome back to Power Breakfast. Now, like we were telling you, today marks the 9th edition of the International Day of Yoga, which was first celebrated in 2015. This coincides with the summer solstice, and the day aims to really increase awareness of the several health benefits of yoga and is being celebrated with great enthusiasm across the country. Remember, on this, the Prime Minister will also be addressing the UN at the headquarters later today. So, we're going to bring you more from that. But for those of you who are working from office or, perhaps spending long hours working from a desk all day, here are some exercises that can really, help if you have some kind of strain on your back. If you have any aching or stiffness in your back, here are a few exercises that could help you and can be performed at your desk.
Now, if you're someone who spends long hours at your desk, then back issues or spinal cord problems is something that you must have faced at some point in time in your life. But how do you stretch and strengthen your back while you are in your chair at your desk? To tell us more, we are joined in by YouTuber Yogini Rashmi Ramesh. Rashmi, welcome to CNBC-TV18.
Thank you very much. So for the back and spine, it's important to have mobility and movement throughout your spine.
Sure.
So we'll do 3 simple exercises.
Perfect.
Focusing mostly on your cervical, your lumbar, and a little bit of stretching to the side.
Sure.
Yeah. So you place your palms either on the handle of your chair or on your knees, however you feel comfortable. You inhale, slowly push your chest out and look up with your head. And as you exhale, slowly touch your chin to your chest and push your spine to the back. Do it a couple more times. Inhale, push your chest out, look up with your head. Exhale, slowly touch your chin to your chest and push your abdomen to the back. And slowly come back to the center. We move on to doing sideways stretches. So you place your palm on the handle of your chair, raise your opposite hand up and stretch to the side. Feel like somebody is really pulling you sideways. Slowly inhale, come back to the center, and we'll do the same thing on the other side. Raise your arm up, stretch to the side, tilt your head slightly upwards. Keep stretching. Slowly inhale, come back to the center. Last one we'll do is a spinal twist. Sure. So you place your right palm on your left handle, left hand behind you, look beyond your shoulder and twist. While you hold this, keep breathing. Slowly come back to the center, and same thing on the other side. Left palm on your right handle, right arm behind you, twist, look beyond your right shoulder, and then slowly come back to the center.
All right, this already feels so good. Thank you so much for sharing these stretches and twists with us, Rashmi.
My pleasure.
All right, that is some helpful information for everybody that's working long hours, perhaps sitting at an office desk. But with that, we're going to wind down on this edition of Power Breakfast with the news that most of the Asian markets are in the red, with Hang Seng leading the losses, 1.7% in the red over there. The SGX Nifty also indicates a weak start, around 20 points in the red. Thank you for tuning into Power Breakfast. We have Bazaar Morning Call up in 2.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now. And we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time. And this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little more than 34 million ton of stock is there in thermal power plant, which is almost sufficient for 13-14 days. And around 65 million ton at the pithead, that is at the Coal India, SCCL and all.
Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. As always, it's a Wednesday morning and it's looking good out there. I'm Prashant, with me, my colleague Sonia and Survi. Guys, hi, morning.
Hi, good morning. And it's also the 9th International Yoga Day. Yes. And I think, for all of us, right, people who sit at their desks for long hours, yoga is so important just to keep yourself in shape. I've been practicing yoga for many years now, and I think that's the only reason why I'm kind of sane, both mentally and physically.
I just check myself. As long as I can do the chakrasan, I feel, okay, all is not lost. So till now, fingers crossed, it's happening till now. You never know with the passing years.
Sonia, sane and mentally, we'll be the judge of that. Well, those are visuals.
Not quite, really. So. But yeah, look at that. The world is celebrating Yoga Day.
I mean, as they say, yoga se hoga, right? I think so it's a big one and internationally accepted, of course. I mean, ancient art, sort of, practice, which now, of course, has got international acceptance. And those are visuals coming in of leaders and yoga practitioners doing yoga around the country.
Today is going to be interesting, right? Because there is a yoga event. So far, Prime Minister Modi has been conducting a lot of these events in India.
Yeah.
It'll be the first, I think, first time after many, many years that he'll be doing it abroad. He begins his US visit as well.
At the UN General Assembly. I mean, talk about destination yoga, right? It's really right up there.
Well, absolutely. And I think, will the markets do a little bit of yoga as well to reach out and touch those all-time highs? I think that's the other question.
You want to show us one asana that you like, perhaps the one that you...
Like this?
Maybe moving a little bit, to fix your back.
Well, markets at new highs, I'll do that'll be an asana. Anyway, I mean, the markets, by the way, are going to start on a softer kind of note. Yesterday was a tremendous day because you had the Nifty, which took support at last Thursday's low and staged a bounce back. By the way, it was almost two halves. Completely two different halves. From 10:30 when the market hit a low, 10:30 a.m. yesterday, when the market hit the day's low at about 860 or so. From that point on, you basically had a very slow and steady up move all the way till about 3 p.m. And then, I mean, it was almost as if a rocket took off, and between 3 and 3:30, all those gains of 60, 70 points that you see on the screen came through, all in the last 30 minutes of trade. So, dramatic turnaround of things. US markets overnight are not providing too much by way of support this morning. So they've come back from a holiday. Monday was a holiday, but yesterday we were trading. The S&P 500 is down about 0.5% or so. We've got some data out of the US, which basically tells you that housing is super, super strong. I mean, month on month, you have the biggest month-on-month increase in housing starts since 2016. And I think right after a Fed pause, this will start to complicate things a little bit. We, by the way, will hear from Fed Chair Powell once again, but this time as he testifies before the US Congress over the next 2 days, both Wednesday and Thursday. He'll be making comments, answering questions. There's a prepared testimony as well. So I think markets will be interested to know additional thoughts after what we saw last week. All right, now let's come back and look at the market here, right? So we got a nice bounce, nice pullback in the last 30 minutes of trade. But upside is clear, right? You need to reach out, make a new high, and then we'll see. If the market does it with gusto, with some exuberance, you kind of can project higher. But if this is a middling kind of sort of market action, as we've been seeing, hesitating around the highs, we'll have to see. So instead of putting projections out on the higher side, I'd still like to go with supports and where you should be comfortable going in. So supports come in at 18,660. By the way, yesterday morning we said that the support will be the last Thursday's low, and the low of yesterday and Thursday's low was almost exactly similar. That's the number, 18,660, which I think is still important. The 20-day also has come up a little bit. That stands at about 18,610. So instead of chasing, watch the price action in the first hour or so, and then maybe around those levels if you get an opportunity, if you must, perhaps take long positions. Bank Nifty has closed around the 40-day exponential moving average, which is 43,710. There was an intraday breach and then we closed above it. So for the Nifty Bank, supports come in at that level, which is 43,710. And then yesterday's low, which is 43,346. Again, instead of trying to chase any move, if you get levels around here, I think you're better suited. It's even, I would say, forget the 40-day. If you get levels around yesterday's low, I think it'll be more favorable from a risk-reward point of view. Massive action in mid-caps and small caps continues. There was a bit of a halt, but it kind of continues uninterrupted. It's a vast space, and the number of stocks which are participating with huge volumes is just something to see. And of course, Prime Minister Modi in the US, markets will eye from geopolitics, etc. There'll be a lot to watch out for. But from a market perspective, the one sector which I think will watch for announcements is basically going to be defense ties, making in India, technology transfers and those kind of things. We've been reporting on this, and I think that remains the focus. Sonia.
Oh, absolutely. And, we're going to also talk to a lot of yoga gurus about their, not just their practice, but also their life lessons, right? So that's going to be interesting. A good day today, but give and take everything, as you said, today is going to be a very flat opening. The market, the SGX Nifty is suggesting a very, very quiet opening, so we'll see how it goes. Yesterday, the Nifty made an attempt to once again get back to that 18,800 mark. The Nifty, remember, give and take everything, is just 70 points away from an all-time high. So we are virtually at those levels, but faltering a bit at higher levels. It's important to look at the group of stocks that are taking the markets there. So in the month gone by, the pharma stocks have come back in a big way. So whether it's Apollo Hospitals, which is up about 12% for the month, Dr. Reddy's is up 10% for the month. So new pockets are sort of making the Nifty get closer and closer to those lifetime highs. But as we were, as Prashant was also telling you, the global markets have been slightly on the weaker side. The Dow was down about 250 points overnight. FedEx was down about 3% after reporting weak numbers. So the earnings are not too great from that pocket. FIs in our own market have been selling in cash for 2 consecutive days now, and it's a large amount. Almost 3,000 crores has gone out from the Indian markets in 2 days from the FIIs. So there's definitely some caution on board at higher levels. Now, just a couple of things. Of course, Fed Chair's congressional testimony is something that Jerome Powell's testimony is something that will be watched very closely. Any indication of further rate hikes is something that the street will keep their eyes peeled out for. And apart from that, in our own markets, as I said, banks on one hand and a couple of other pockets like autos, pharma, etc. on the other hand, banks have been faltering, but on the flip side, plenty of action in so-called laggards that are coming back in a big way.
Yeah, that's been happening. In IT, I think, is a case in point, because we've seen that trickle buying come back into the IT sector. That's the one that was trying to fight for the bulls even yesterday. But all things put together, I was just looking at the extent of the ranging action, and like Prashant said, that's what I thought. Can the bulls actually do a yoga stretch and get out of this range, which is what they've not been able to do? I mean, last 17 sessions, we've been dithering around 350 to 400 kind of point band. So it's 18,500 roughly, or 550 on the downside, to about 18,850 on the upside, and there's been no break. So the silver lining is that we're not really alone. We are up just about, if you look at the last 1 month, not just June, but the last 1 month data, Nifty is up 2.7%. Look at the other markets. Dow's up about 2%. The CAC is down 2.5%. Shanghai is down about 2.5%. Of course, the only outlier market is Japan. That's where the headlines are, the action is. That's where money managers are going. That's where Warren Buffett is putting his bets out as well. So that market, of course, has been stealing the thunder, 7.5% up in Japan in the last 1 month. But otherwise, most markets have been in a bit of a ranging zone. So that is some comfort that we're not the only ones out there, which is why the action perhaps is just going to remain on individual stocks. Prashant mentioned the defense space. We saw the defense rally on Monday. Let's see if we get some more leg up, because the announcements should start coming through tomorrow, actually. Today, Prime Minister Modi has been in New York. He's doing some meetings over there. He'll be at the UN General Assembly, like we told you. That's where the yoga action of the day is going to be. Pretty big moment, really, for India, for yoga, to be out there and spreading the word at the UNGA. But it's tomorrow onwards. That's when he's in DC. He's doing the bilaterals, meeting President Biden and also meeting other CEOs. That's when the defense announcements should start trickling in. So let's see if there's some follow-through buying, just because of sentiment on these big stocks. Remember, HAL is in focus because of that big GE engine deal. Last but not the least, I mean, we're still searching for cues and triggers. So it's further commentary from the US chair, which we should get tonight as he's making the statement before the committee. And there's monsoons. The Met experts have been saying next 2-3 days we should see a revival in Maharashtra. No sign of that, at least in Mumbai as yet. But we're back to the mid-cap action. Today, there'll be some interesting stocks to track. I mean, we heard RVNL come out with some announcement on that big Vande Bharat train order, that some more block deals in focus, Piramal Enterprises for that matter. I think we'll just have to stick to looking at individual stocks for now.
Oh, absolutely. And I'm very, very keen. As you were talking about how he's going to be performing, or rather conducting, Prime Minister Modi will be conducting yoga at the UN headquarters. 9 years ago, if you remember, he came out with this idea of celebrating 21st June as International Yoga Day. And since then, I mean, yoga has transcended not just the body and the mind, but all global barriers as well, right? I mean, it's a big, big moment. And I'm very interested to see what comes out of that.
All right.
Okay, but yeah, let's begin the show. We have lots coming up in the next 2.5 hours. And first up, we have a comment from Mahesh Nandurkar of Jefferies, who says that the economic indicator for May saw a growth increase of 2 percentage points month on month to a 4-month high. He says several broad data points improved, such as fuel consumption, domestic eco-linked imports, and cement production. He adds that auto and property sales, registrations, electronic payments, and credit growth also demonstrated firm trends. Mahesh says while the trade deficit increased, the drop in inflation was sustained, though a weak start to the monsoon is a concern. He remains overweight on the domestic market.
Okay, well, on equities, we've got Sanjeev Prasad of Kotak Equities, who says that the strong performance of mid and small cap stocks in the past 2 months raises the prospect of irrational exuberance in the market and also further reduces the set of stocks with some value, which has struggled to find value in the market, with many stocks in their favored sectors like BFSI, capital goods, healthcare services, real estate having run up sharply in the past 1 or 2 months, leaving the BFSI sector perhaps as the only meaningful sector with any value.
Okay, so that's Sanjeev still holding out positive favor for the BFSI space at least. Let's move to the money markets and get you some views here. Kunal Sudhani of Shinhan Bank says the Chinese yuan continues to weaken, which has its reflection on the rupee as well. He says the dollar index is seen consolidating with 102.10 as a support, and the 10-year US Treasury yields have cooled off as well. He says all eyes remain on Fed Chair Powell's testimony, which is due today for further direction. For the USD INR pair, Kunal says that 81.85 acts as a support, while 82.25 is a resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7 to 7.04% last week. He says global cues had a little effect on our market, which reeled under the pressure of the auction supply. He says demand remained muted, particularly in the longer tenor papers. Going forward, he adds, the market will take cues from Bank of England's rate decision, US Fed Chair Powell's testimony, and the demand in weekly bond auctions. He expects the 10-year benchmark bond yield to trade in a range of 7.03 to 7.1% for the rest of the week.
Okay, and as we've been telling you, really the action is going to be on individual stocks, and there are plenty to track today. We'll talk about them in our top 10 segment in just a bit. Today we are looking at Shriram Finance, Piramal Enterprises, HDFC Life, RVNL, Shilpa Medicare, GR Infra Projects, Pidilite, Thyrocare, Jamna Auto, all these on the green side likely today. Some other stocks that we're looking at, actually none of them on the red side. Now that I look at the board, it's all 10, in all probability, may open up on the positive side.
Okay, well, Gary Schlossberg is now joining us, Global Strategist at Wells Fargo Investment Institute. Gary, great to have you with us here on the program. Thanks very much for your time. What's your opinion? Global equities, Gary. I mean, the US is continuing to see a lot of action, although at the margin, some are starting to say that this is starting to look very, very stretched. Are you in that camp, or you think there is more to go here?
We are. We think that the U.S. still sees a recession ahead, a moderate recession, sometime late this year or no later than the early part of 2024. There is some optimism developing on the interest rate outlook as well. The idea that the Fed is in an extended pause on its way to rate cuts. I think Powell's testimony, Chairman Powell's testimony later today or tomorrow, could pour cold water on that. He'll certainly do his best to keep alive the possibility of rate increases, just to keep the market on the straight and narrow. In the meantime, valuations are quite high. Here in the U.S., the S&P 500's price earnings multiple, forward price earnings multiple, about as high as we've seen since March of 2022. So a lot riding on the testimony, but we think the chair will have the effect of cooling things down a bit.
Okay. So what does all of this mean, Gary, for a market like India? I ask because, you know, the S&P 500 is up about 15% for the year, while India has sort of lagged behind, right? I mean, we're up just about 3-4%, although a lot of the action is happening in the broader end of the market. Do you think India could take over for the rest of the year, you know, sort of outperform developed markets? What's the sense you're getting?
Well, I think it's going to be a tug of war a bit. The fundamentals in India, as you heard earlier from one of the analysts, do look quite good. However, the international environment, slowing economic growth, the prospect of further interest rate increases at the very least by the Bank of England and the European Central Bank, with the Fed perhaps sitting on the fence but being a bit more circumspect about the outlook. These are going to create headwinds for developing markets, emerging markets generally. There's also the El Nino effect that's something of an uncertainty. So there will be headwinds ahead, but I think India should stand out among the emerging markets as one of the best positioned for gains if they materialize generally for the sector.
Harry, hi, good morning. So, you know, just to come back to the global picture, when you say that you're expecting a mild recession in the US from a market direction point, are you expecting more of ranging action for, say, the second half? Or do you think this is just an interim pause and then we see a resumption of the uptrend?
We think there will be a pullback in the market. It may be a mild one, but with the recession putting a further dent on earnings, keep in mind earnings are already down year over year. During the balance of the year, I think the outlook for corporate earnings will become a bit more guarded. That should be reflected in the equity market. By very late this year, if the prospect of an economic recovery sometime in the spring or perhaps summer of 2024 does begin to take hold, you could see the market recover a bit. But we think there'll be a speed bump in the market as we enter the early stages of an economic slowdown, as mild as it might be.
Okay, and how would you describe mild? I mean, are we talking 5 to 10%, more or less? I mean, any sense of that?
Well, we are looking for a peak to trough decline of about 1.5%, which would place it as a moderate slowdown, similar to what we had about 30 years ago. A mild slowdown, anything less than 1% peak to trough. We think it'll be a bit more than that, but certainly the risks, the chances are beginning to tilt toward a mild economic slowdown, given the economy's resilience so far and some of the positives out there. Notably, a slowing of inflation. Now, that disinflation has resumed over the past couple of months, and we think will continue through June.
All right. Well, we'll leave it at that. Gary, thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. Let's slip into a quick break, but on the other side of the break, we'll get our list of top 10 stocks lined up in just a bit. Stay tuned.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 160,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on
All right, welcome back. It is International Yoga Day and hope you've got all your yoga asanas in place. But we've got our research team in place to help you with all the stocks that you need to watch out for as we begin the day. Let me get Nimesh on board. Nimesh, Shriram Finance, Piramal Enterprises on your list. Tell us about that.
Well, so another large block, and this time Piramal Enterprises is looking to sell its entire 8.3% stake in Shriram Finance. The book was launched last evening. The floor price indicates up to 5% discount to yesterday's closing price. So, last week we saw TPG exiting Shriram Finance, and now Piramal is looking to exit. The important thing is, I guess the street was anticipating this move from Piramal because the stock rallied 6% yesterday. At a floor price, the stake that 3.1 crore that Piramal holds, they will raise close to 4,600 crores. The market cap of Piramal Enterprise is just 20,000 crores. So it's a big monetization for Piramal Enterprise. So I'll go with green for both Shriram Finance because it's a clean out trade, and for Piramal they're getting say 4,600 crores by selling that 8.3% stake in Shriram Finance today.
All right, interesting. And we were pointing this out yesterday on Piramal, and the stock was rallying. Nimesh, thanks very much for that. Now, HDFC Life and HDFC will be in focus. Surabhi is here to tell us why. Surabhi, morning.
Morning. So, Competition Commission of India (CCI) has approved HDFC Limited to acquire additional shareholding in HDFC Life. Now, currently they hold around 48.6% in HDFC Life, but post the merger of HDFC and HDFC Bank, the merged entity will hold over 50% in HDFC Life. So, this was on expected lines, but still positive for HDFC Life.
Okay, got that, Surabhi. So we'll watch out for both of those stocks. Some more in the news. Let's talk about that clarification from RVNL on their big Vande Bharat order. Vivek, good morning. What did you make of it?
Well, good morning. Very interesting clarification coming in from RVNL last evening. Just post-market hours, they issued a clarification to the exchanges. So now what the company is saying in terms of the news report that was put out day before yesterday, the company is saying that the news of the company as well as the Russian partners JV breaking up is factually incorrect. What they are saying is that the MOU or the Memorandum of Understanding that was signed between the two parties is still valid, and none of the parties have terminated the MOU as yet. In fact, what they are saying is that the bank guarantees will be submitted on time as per the tender conditions that was put out in the bid document. And lastly, the company does add that there are right now deliberations still going on with the Russian JV, in terms of changing the terms of the Memorandum of Understanding. So we'll still wait and watch out for what the management indicates to the exchanges if there is any change as far as the MOU is concerned.
All right, thanks a lot for that. Well, let's go back to Surabhi. She has some more stocks that are in the news. Surabhi, what are you looking at today?
So I'm looking at Shilpa Medicare firstly because they are going to consider a fundraise via a rights issue in their board meeting on Friday on 23rd of June. Next is GR Infra. Now they've received a letter of award from NHAI for a 4-lane project in Uttar Pradesh for 1,085 crores, and the completion period for this project is 730 days. Additionally, their wholly owned subsidiary, the GR Logistics Park Private Limited, has also executed an agreement with National Highway Logistics Management for a logistics park in Indore worth 758 crores. I'm also looking at Pidilite because the company has launched manufacturing facilities under its JV Pidilite Liticol and 10x Pidilite in Gujarat. Now the Italian counterparts have transferred technology to Pidilite as a part of their JV, and now the company will sell epoxy and epoxy adhesives to tile application for Pidilite Liticol and stone care products for 10x Pidilite. And lastly, IGL is also on my radar as Citi has written on IGL with a buy rating and a target price of 560. They say in the new development, the Delhi government states that the validity of permits held by taxis running on CNG will now uniformly be 15 years. So in the draft scheme mandates, the aggregators will have to switch to full electric cab fleets within 7 years. While the final aggregator policy is awaited and there are still uncertainties, the recent correction improves the risk-reward ratio in the favor of IGL.
All right, got that. Thanks very much, Surabhi, for all of those stocks. Back to Vivek. Vivek, you have some more on your list?
Well, that's right. Yesterday you saw some very interesting block deals, in counters that are reasonably well tracked. First on our list, Thyrocare, you saw almost 5% equity change hands. So yesterday in the post-market filing, the Agri-Tech Asia Fund, sold almost its entire stake. A 5% stake sale was done at close to 488 rupees a share. Majority of the chunk was bought by ICICI Prudential Mutual Fund, buying almost 22.5 lakh shares. post the block deal, you did see the stock rally quite a bit in yesterday's trading session itself. Also, watch out for Jamna Auto. So Small Cap World Fund sold 1.5% stake in yesterday's block deal. At the end of the March quarter, they held close to 3.2% stake. Even this particular stock rallied quite a bit after yesterday's block deal. It'll be interesting to see whether there is any follow-up buying in both of these counters today.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Shriram Finance, Piramal Enterprises, HDFC Life, RVNL, Shilpa Medicare, GR Infra, Pidilite, Thyrocare, Jamna Auto and IGL. Well, guess what? There are no stocks with negative news flow today. But Surbi is back with us. She'll tell us about a couple of brokerage notes that she's focusing on today. Surbi, what do you have?
So firstly, I'm focusing on ICICI Pru. Jefferies has written on the company and they have a buy rating and they've raised their target price to 640. They say the growth pickup is a key agenda for the company and there is scope for valuation to re-rate from these levels. They also say the new CEO, Mr. Bakshi, has experience from his previous bank head as a retail banking in ICICI Bank, and that should benefit the company. Also, they are focusing on improving distribution efficiency and customizing products, and tapering off of ICICI Bank channel should even out by second half, so that should benefit the company as well. Motilal has written on Blue Dart. They have upgraded to a buy with a target price of 8,040. They say the lower ATF prices should support margins and aircraft additions will boost volumes in second half of FY24. They say they have market leadership in Air Express and now they're focusing on increasing market share in e-commerce. They expect the company's EBITDA margins to rise to 13 to 14% from second half of FY24 from current levels of 10 to 11%. And lastly, Morgan Stanley has written on BEL. They have an overweight rating with a target price of 136. They say that the company has received orders worth 59 billion rupees in FY24 so far, which is 30% of their FY24 order inflow guidance. For FY24, the company has guided for a revenue growth of 17% and an EBITDA margin band of 21 to 23%. The company targets to maintain its book-to-bill ratio of 3 times.
All right, got that. So a couple of those stocks in focus on the back of those brokerage reports. Thank you, Surabhi, for that. With that, let's move to commodities. We have Manisha joining in as always with all the action. Manisha, good morning. What's on your radar today?
Morning, Surabhi. Thank you for that. Well, I'm looking at the crude oil prices, which after losing 1% overnight have seen some stability right now. Well, the markets are looking out for the U.S. Fed Powell testimony today and tomorrow with Congress, which would give you further cues about the monetary policy going forward. In the meanwhile, while we did see a knee-jerk reaction, but the China stimulus, a 10 basis point rate cut, is not seen enough to revive growth. Markets see it late and much less than expectation, and that's weighing onto the street yet again. And then apart from that, you have the U.S. dollar index, which has firmed up yet again, and that's weighing onto the crude oil prices. Not just that, metal prices also saw decline in the overnight markets. So you have iron ore prices now off 2-month highs. Copper has come off after its initial gains, and you also are looking at zinc, which fell 2% overnight. Aluminum, copper, all of these metals actually declined anywhere between 1 to 2%. So all eyes now on what the U.S. Fed testimony really reveals.
All right, Manisha, thanks very much for that. We'll take a very quick break here. We'll come back. Deven Choksi will be with us of KR Choksi Securities for some specific stock talk. Later, we'll also connect with Rajiv Samant of Sula Vineyards to discuss the company's business outlook. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this
Welcome back. You're with us on Bazaar Morning Call. Let's get our first conversation going on the markets. We have Deven Choksi joining in. Deven, good morning. Always a pleasure having you on the shows. So, before we start talking about individual stocks, I just want to get your sense on the mid-cap market, because I think the last 2 months, it's not been about the index, it's been about individual stocks. And we've seen gains. I mean, stocks have doubled in 2 months flat. So, in general, do you still see a lot of value in mid-caps? Or are you slightly more concerned with the quality, with the pace of the rise now?
Sure. Good morning, Surbi. Well, in general, I would say that I think the market is buying stories. I think they are probably not getting inside the details. And those stories would be related to railways, related to defense, or for that matter, I think anything to do with the technology. I think simply without applying the numbers, they are basically buying those stories. And that is where probably one is slightly concerned about at the same time. That while underlying potentials for those companies remain high, but at the same time, the valuations are stretched in some of the mid-cap, small-cap companies. And that would probably mean that I think some of the companies would probably pay back to the investor on the market capitalization in 1 year or 1.5 year time. That kind of stretch valuations that they have given. So from that perspective, I think one has to be extremely careful about getting into the market and believing those stories, unless one has done detailed homework on those companies from the fundamental perspective. So we believe that, yes, I think there is underlying opportunity. One will have to be selective. At the same time, I think one will have to be extremely mindful of the high price that you are paying for some of those companies. Currently, the entire rally is being fueled by the typical class of HNI investors who are shifting positions from one company to another company because of the relatively lower size floating stock available in the market. Now, the result of which, I think, with a reasonably good size of money, I think that they put in, I would think that I think they are basically making the killing out of it. So that is where one will remain a little bit more cautious at this point of time.
Okay. Deven, hi, good morning. I don't know if this is a believable rebound, but there is a rebound nevertheless in some of these large tech companies, right? So this week, for example, Tech Mahindra is up 3%, HCL Tech has rebounded about 2-3%, TCS, Infosys has seen some buying. Do you think this is just a dead cat bounce, or is this something that you would want to put some money to work in the technology space now?
Good morning, Sonia. Well, I believe that I think the technology is one space where probably I think you will have to stay invested. And this is the opportunity that you are getting currently because of the external environment in the global market. remaining uncertain, you're getting an opportunity to buy some of the good quality stocks at a valuation which is probably, I think, far more comfortable than ever before. Likes of Infosys available to you at around 17, 18 forward P. I would think that my downside is probably limited in this kind of a business. Given the fact that the opportunity basket is growing for most of the technology companies, particularly the niche players in mid-cap space, I think are definitely having relatively better visibility. But the fact that the larger players like Infosys, TCS have a good amount of large size contracts, which are giving them the sustenance power for next 4 to 5 years. I think given those kind of contracts that they've signed up, though they may have probably slowed down in recent months to a certain extent, but still it is not taking away 15% kind of a growth for these companies in a normal situation. So from that perspective, I would think that the current valuations are giving an opportunity to buy into some of the good quality IT stocks, technology stocks, where I believe that the trend will continue to remain favorable for them as far as I think the prospects are concerned going forward.
Devin, you know, it's also, I mean, another way to look at the market is that nothing stays down for very long. You know, underperformers, like for example, take the life insurance space, which is starting to make a comeback. Even the asset management space. I mean, we saw what happened with HDFC AMC, and we'll have something that Kotak has put out this morning with our research team in just a bit from now. So that is another way you can do it, right? I mean, you can go after momentum, but then as you said, that's a very, you got to constantly move, you got to constantly shift and be watchful. Or you try and buy where there has been a lack of interest and stocks are still down, and you know, wait for momentum to get into that space. I mean, anything comes to your mind? I was looking at, for example, these EMS companies, Dixon, Sirma, Keynes, Amber. This quarter has been exceptional, 60-70% gains quarter to date, and 15 days to go for the end of the quarter, Devin. Anything comes to mind?
So Prashant, all those companies remain extremely promising, and they are quite attractively positioned as far as I think the business outlook is concerned. They have relatively, I think, a good amount of order book in place at the same time. However, I think the bigger challenge continues for investors, particularly because of the larger amount of, I think, the valuation that you are paying for. And that is where I would think that I think one will have to remain a little bit more watchful. I'm not against, I think, the thesis that the companies are remaining fundamentally very positive, but at the same time, the valuation that which they are quoting, somewhere I'm not fully convinced about it. Maybe I think in the market corrections, whenever it happens, I think that would be the better time to buy into some of these stocks. I would rather stay with those ideas which you probably started mentioning about, say, for example, insurance business, say, for example, credit lending business, where you are seeing higher amount of growth continuing at the speed of around 20% or so. You are seeing this 20% plus kind of a growth in housing finance business. You are seeing 20% kind of growth in the new business premium that insurance companies are collecting on the life insurance side. I would think that I think these are relatively stable businesses, and they give visibility to me for next 3 to 5 years. So would buy into those companies because they are also available at a valuation, which is probably giving me margin of safety comfort, if I may to put it, from my portfolio building perspective.
All right, Devin, stay on. We have lots more questions for you, but let's get our first corporate conversation off the block as well. And the company we're looking at right now is Sula Vineyards. Now, Sula has launched 3 new luxury villas in Nashik at their properties. And in other news, Kotak has initiated coverage on the stock with an ad rating and a target price of 500, which actually is not too far away from where the stock is right now. It's close to 470. Kotak saying 500. Stock has had a fantastic rally. I mean, the chart says it all, 42% in the last 3 months. Rajiv Samant, MD and CEO at Sula Vineyards, is joining in. Rajiv, good morning. Great to talk wine first thing in the morning, right? I'm all for it. But, you know...
Absolutely. Good morning.
That's on a lighter note. But I found that announcement pretty interesting of you launching more properties, you know, at your lands in Nashik. Now, correct me if I'm wrong. Right now, if I look at it as a, you know, year basis, your wine tourism business is about 9-10% of the total revenue. And I think that is where the hospitality part pretty much goes in. Now, with the launch of these 3 new properties, what's the intent? I mean, do you want to go to a 30-40, 30-70 mix, a 40-60 mix? What's the long-term trajectory? And in the short term, what are occupancy levels looking like? What are average rates looking like? Because we know hospitality has been booming, and how?
So this is a terrific business for us, an extremely profitable business. And this is really the place where we introduce so many Indians to wine for the first time. You might be aware that our vineyard is the most visited vineyard in the world, very possibly. And last year we had about 120,000 unique individual tastings there. So really expanding the wine universe. When you say that hospitality is 10% of our revenue, what that masks is the wine sales that we do there, which actually appears in our accounts in our regular wine sales, which adds another 5 or 6%. So really, the entire wine tourism business, including the wine we sell on site, is more like 16 or 17%. Now, our overall business is growing in strong double digits. So I don't necessarily see hospitality reaching 30%, but as you know, it's so difficult to get a room in our resorts on the weekend. It's so successful. It's 100% occupancy most weekends. So we really needed these new villas. And these days, villas, luxury villas, beautiful view, heated pool. This is what people are looking for. We already had one, which is a huge success. You can never get room there. So we thought it was time to add a few more. Many more options for those of you who want to visit Nasik and can never find, the occupancy. So we have about 100% occupancy on weekends, probably more like about 60% during the week, which lands us up anywhere a nice 80% plus occupancy generally.
Rajiv, we are still waiting for that invitation to the CNBC team that you promised us for. It hasn't come through just yet.
It's an open invitation.
I'm absolutely in.
You have to give me the date.
I'm the wrong audience because I'm a teetotaler, but yeah, you have a lot of the others who can perhaps come and get their money's worth there. When we spoke to you the last time around, you said that premiumization is a big theme for you now, and that's a big growth trigger as well for the company. Tell us a little bit about that. What is the scope that you see in, higher priced wines in terms of how much could it contribute to your overall business? And does it bring about some margin levers as well? Can you do better margins in FY24?
So Sula has really been concentrating on our premium business. We consider our premium as being wines priced in Maharashtra at 700 rupees plus. We call those our premium. And then elite segment, which is 1,000 rupees plus. That has been growing far faster than our overall business. So if you take a look at over a 4-year period, every year around 100 basis points is being added onto the premium and elite. So it's about 400 basis points more, 500 basis points more over the last 4 years. And that much is less the share of the economy and popular category. So Indians are drinking more wine, of course, and more they are happy to reach for 1,000 rupee or 1,200 rupee bottle of well-made Indian wine. And of course, Sula leads the pack with our new Source range, which is a huge hit, especially with the rosé, considered possibly India's best rosé wine, the Source rosé, and then our Rasa range of very fine high-end reds. So the Rasa Cabernet Sauvignon is one of our fastest growing wines today in our portfolio.
Rajiv, you're already making me get into weekend mode. I mean, there's so many names coming up and so many different ideas coming up. But sorry, before I hand it over to Prashant, just to go back to the first point, the hospitality revenue right now is 10%. Let's leave the wine sales out of it. I mean, let's just stick to hospitality, wine sales separately. How much will that 10% go up? Now, you've launched 3 new properties. Given the pricing, that 10% becomes what, 11, 12% this year? And what does that mean for the margins, given that these are premium properties commanding, I think, top of the line rates?
Yes, so you should see a couple 100 basis points up, be it in our tourism business, not including the wine, which is another, as I said, another 500, 600 basis points. And yes, this is a much higher margin business for us, and it's an asset-light business. So these villas, Sula has not put in the capex to construct them. We have our business partners in Nasik who put in the capex, who build them for us, and then we lease those and we operate them. And you can say we put in the wine software. That's really what we do. We do not intend to really become a big hotel and hospitality business. Wine is our main aim, and you know that we dominate this business, and there's tremendous runway for growth ahead in India. We see this as the most exciting market for growth in wine over the next decade in the world. That's what we're really looking at. That's what we are on the cusp of here. And our resorts are a way to enable people to come to the vineyards and to taste wine in their original element as they were meant to be tasted. That's really what we are looking for here. We are not aiming to compete with the likes of Taj and Oberoi or even Saffron Stays or Lohono.
All right, got it. And that'll be, I think, a relief to them. Rajiv, hi, good morning. I have a simple question, very basic question for my understanding, and maybe helps investors as well. So you did about 550 crores in revenues in FY23, right? Does the amount of land that you need to, which grows the grapes which you make into wine, I mean, for 550 crores to go to, say, 1100 crores, does the land under cultivation also need to double? Or it's not linear in that sense?
It absolutely needs to double, but I want to just point out that we have pretty much an infinite supply of wine. So just take Maharashtra, there are something like 1 lakh hectares of grapes. Now, most of those are table grapes, but wherever you grow table grapes, there you can also grow wine grapes. And Maharashtra doesn't have more than 1,500 hectares of wine grapes at this point. So we're talking about only 1.5% of the overall grape acreage is wine grape. So there's a huge runway. Every time one of these table grape vineyards, the farmers, it comes up for replanting, they always approach us and ask us, is there any scope to replant some of this acreage with wine grapes? So right now, in fact, we have more demand for planting our vineyards than we can actually allocate the supply. Of course, we don't have any of our own vineyards. Again, we have an asset-light model in terms of vineyards and viticulture. Our farmers are our partners. The grape growers of Maharashtra and Karnataka, they are the ones who plant for us. And we have a lot of farmers very excited and very willing to plant for us.
Right. Rajiv, so you're saying that land is not a problem at all? I mean, not
at all. 1 lakh hectares of table grapes. You know that Maharashtra is one of the top grape growing regions in the world.
And you need wine grapes. You need wine grapes to make wine, or you can use other grapes to make wine as well?
So you can use the table grapes, your regular Thompson seedless, etc., to make the cheaper wines, where you don't necessarily have to give the complexity. People are just looking for a nice sort of innocuous, sweet tasting wine. So our wines that cost less than 600 rupees are mostly made from table grapes. And that gives us a huge advantage because that is, there's about 10,000 times the supply that we actually need. It's open market.
Rajiv, sorry to interrupt you. Due to paucity of time, I just want to squeeze in one last question. The last time we spoke with you, you said that you are looking to reduce the promoter pledges. I think 10% of the 28% held by promoters is pledged as on March. Any plans to do that in FY24?
I got to say that I don't have the exact answer to this, but for sure the promoter pledge is not going to go up. We're going to be talking to our bankers and financiers soon to ask them to bring it down. Given the stock performance of Sula, there's no need for that pledge to be that high.
Okay, all right. We'll leave it at that, Rajiv. Thanks a lot for joining in. Appreciate your thoughts and all the best with your wine tourism business and, the way forward for overall Sula Vineyards as well. Let's do one thing. Let us take a quick commercial break on that note. On the other side of the break, we'll get the pre-opening rates and we'll try and get you some more stocks that are in the news. Stay tuned.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these.
Okay, welcome back. We're 9 minutes away from the pre-open session. Anuj is here in the studios with a quick check on things. Anuj, what are you watching out for? Morning.
Morning, Prashant. Well, the buy call worked yesterday. It was, just that conviction call, and market ended at high point of the day. 5 reasons why it happened, and I think one more reason is happening right now on the bottom of the screen. First reason was the successful defense of the 10-day exponential moving average. Normally in an uptrend, you defend that. I think most important was what happened with that 5,000 crore block deal of HDFC AMC. I mean, just telling you the kind of appetite that you have for stocks. Even in a sector which is not really your favorite sector or has headwinds, you saw without any slippage a big block deal getting absorbed. Same has happened, by the way, with Shriram Finance right now. Of course, that's a stock where you have sectoral tailwind. The broad market is showing no signs of weakness. The market was oversold in F&O, and the Fin Nifty expiry that helped for 5th day running. Now, the big question is, do we hit all-time high today? And more importantly, do we sustain above that? I think excluding IT, most of the sectoral indices are already at lifetime high. The mid-cap index has been hitting lifetime high regularly. The opportunity is in small-cap index. The small-cap index is still 10% away from all-time high. And I tell you something, if interest rates start to drop from here, I won't be surprised if over the next 2 years, small cap index maybe even doubles from here. It's the kind of opportunity that you have in the small cap space. Auto and FMCG are the leaders. I'll keep an eye on Nifty IT once again. It's a 200-day moving average. HCL Tech has hit fresh 52-week high. That's very interesting. So let's see. But I think the stock that I'm watching out from here on is actually HDFC Bank. That could well be the clincher for the market from here on. It could have bottomed out. Maybe a bit early to call that, but it could have bottomed out. I think the first upgrade that you have today from Goldman Sachs is first of many that you would see over the next many days. It looks like the selling has been absorbed here. If it starts to rally, the Nifty Bank can end its underperformance of last 1 month. And one more reason I say that is if you look at the HDFC Bank ADR, which had gone into a bit of a discount at one point, it's now back to a 16% premium very quietly. The stock's been falling in domestic market, but there's no sign of fall in the ADR market. It's 16% premium. So again, that's giving me a signal, maybe a bit early, but that could be the stock which leads the next round of rally, and that would help the Bank Nifty as well.
All right, Anuj, thanks a lot for that. By the way, Piramal Enterprises, now that deal seems to have been done, likely to have sold its entire stake in Shriram Finance at 1545 rupees a share. So that large trade has happened. About 3.2 crore shares have changed hands in a block deal window, so do keep your eye out on that. Devin Choksi is still with us, so let's get back to him. Devin, the stock I want to ask you about is Apollo Hospitals. It's had a dream run this year. I mean, this month the stock is up about 12%. And, the management, of course, is very bullish on the whole digital arm, the Apollo 24/7 business. And JP Morgan put out a note, I think a couple of days ago, where they said that there is a big supply shortage in the industry, which is offering a very promising growth prospects for the current incumbent players. Your thoughts, is the risk reward still favorable for Apollo Hospitals?
So, Sonia, I don't know about, I think, the valuation aspects. I feel that the valuation has always remained on an elevated level. What I am particularly, concerned about is, the kind of money that this kind of business will keep on requiring for expanding the business. So from a shareholder's perspective, the money free cash flow is definitely not going to be available, because the expansion of the new rooms and new businesses, will continue. New properties will have to be continued, particularly for hospitals. So that is probably, going to take away larger part of my cash flow if I'm an investor into the company. That is bothering me to a certain extent, and that is where probably I'm mindful about paying the valuation to this kind of companies. So there is no doubt about the growth that they are putting across, the number of beds that they are commissioning with a good growth plan that they have. So there is no doubt on that particular aspect. But this concern which I expressed, I think remains with me. So not very, very gung-ho about buying into it at a higher price.
Okay, got that. Devin, before we sort of let you go today, we were just talking to Sula, had that detailed conversation. Your thoughts on either that stock or anything else? Let's say if you want to play something in the urban discretionary consumption basket, which stock would you go with?
So I think Surbi, Varun Beverages is one company which possibly we have been liking. Of course, I think the stock has its own run-up also in recent times. But in a couple of months back, I think the stock was probably available at a relatively more comforting levels. The largest bottlers is a mainline story that they have. At the same time, I think the growth prospects, underlying growth prospects remain very strong in this particular company's business plan. That is where we like this particular company. If I have to compare on a like-to-like basis some of the companies, Sula. Maybe I think this is a little different, but yes, we like this company from that perspective.
All right, Varun Beverages, look at that rally, 100%, over 100% in the last 12 months, been one of the biggest movers. Sula not too far behind, so people love their drink, it seems, and the stocks that are associated with it. We'll take a short commercial break. We'll come back with the pre-opening rates. Also, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. In a bit, Rajesh Palvia of Axis Securities will also be with us to discuss some F&O strategies. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Welcome back. So we are going to be getting our pre-open rates any second now. In fact, they're trickling in 40 points up if you go by the pre-open Nifty immediately. But let's wait for it to settle. Let's see how this plays out. Right now, Wipro, Tata Motors, Tata Steel, these are some of the stocks on the upside. So that's pre-open just kicking off. Good time to bring in our technical experts as well. We've got Sudarshan Sukhani as well as Mitesh Thakkar with us as always. Gentlemen, good morning. Great to have you on. Sudarshan, let's start with you. Yesterday, the market managed to make a very, very smart recovery from the lows. That's commendable. But once again, global cues are not very supportive today. So what's the index call?
Good morning. The Nifty is in a trading range, and that range is going to last for some time. So the chances are that we will move down towards support and up towards resistance inside a trading range there is not much trading that is possible and not much trading should be done. So the real trade will come if we break 18,900 on the upside, and then also we need a lot of patience to see that it is a real breakout. You know, the Nifty is not at 16,800, it's at 18,900 or 18,800 now. So long trades now need to be taken with a lot of care. I would suggest that the market is in a range and it is best avoided. The Nifty is still a buying opportunity for intraday traders. If it dips towards 18,700, keep a 50-point stop loss and try to go long in the Nifty for an intraday trade, but nothing else. The bank Nifty is a complete avoid despite yesterday's rally. It's giving very clear signs of distribution. Stay away.
Okay, stay away from the bank Nifty. Got that. I guess that's some sane advice coming through, because give and take everything, the bank Nifty has seen a big fall in the last many days. Mitesh, would you concur that even if you're long on the index, you should keep your hands off the bank Nifty, considering the kind of weakness that we've seen in the last many days?
See, I think, I would not term it as a very classic case of a weakness. My sense is that the indices, are kind of overbought and are just therefore chopping around with some kind of sideways activity. The bank Nifty, for example, while it's been underperforming, no doubt about that, to the Nifty in the last few days, but it hasn't given a very big breakdown on the charts. I think the key support areas of 43, 400, 300 zone still held on. And similarly, Nifty also, just kind of flirted with the 18,650 mark and managed to bounce back. So I think till that breakdown happens, then I think, I look for a corrective decline or a pullback. The idea is that because of the position of the indicators, in case the breakdown doesn't happen, then the markets will be in range, they will contract, and till then the indicators will cool off and then be ready to start again. So I think this is a phase when, you basically, if you're driving an automobile, you change the gear, you press the clutch, and now you are supposed to change the gear. Whether it will be on the upside or on the downside, we'll see in the next few days. But broadly, it's a pause kind of a phase, and therefore I think, the markets, and that's what I've been advising for the last few days. I think avoid the index. There are clearly signs of slowing down. When it's made a fresh high, that big bump of momentum is missing on the Nifty, and the bank Nifty is clearly underperforming. So they're basically consolidating, and I think trading is clearly more stock specific.
All right, Mitesh. So what in stocks would interest you? Where would you want to put those trades on?
On the stock side, morning Prashant, I have today 3 buys to a sell. HCL Tech, I think Anuj mentioned that it's made a fresh swing breakout. That's a buy with a stop at 1154 for a target of 1200. ICICI General Insurance, and we've had buys on HDFC Life and ICICI GI earlier as well. Now it can be bought afresh with a stop at 1274 for targets of 1335, and a buy on Atul Auto with a stop just around 7,000 for targets of 7310. And one sell call, that's Concord. Keep a stop at 649, look for targets of 610.
All right, and how about you, Sudarshan? What would your call be today?
Well, it's primarily on the buy side. ABP is a buying opportunity. It's breaking out of a trading range. Buy with a stop under 42.85. Bajaj Auto is a buy. Now, the Bajaj Auto has actually been falling. This could be a brief correction. We'll find out if it goes up. Then it's a correction. But keep a stop at 45.20. It's worth buying that dip. Then I have Persistent. Persistent is a trading range similar to Bajaj Auto, decline range. This could be a correction. So then we want to go long on a dip, buy with a stop under 48.50. And finally, I have PVR as an intraday short. PVR is in a mess. The chart itself is fairly bearish. So it's an intraday short with a stop above 14.29.
Okay, just a quick view on Piramal and Shriram. So let's just have 4 minutes into pre-open. So I think we are starting to get an indication. Shriram, I think, is up 10%, and the Piramal stock will also come up. Piramal was up about 6%. Piramal Enterprises, that is. Piramal is up 7.5%, and Shriram is up. So in one stock, the overhang goes away. Remember, Piramal used to own stakes in 3 Shriram companies, 2 listed, 1 unlisted. And of course, the merger happened, and City Union and Shriram Transport to Shriram Finance. And the resultant stake was in that company, and now that is out of the way, and one gets the money, for the other the overhang is out, and stocks are up sharply this morning. Similar kind of pictures, we saw something in HDFC AMC yesterday. Any thoughts, Mitesh, on these 2 names, Piramal and Shriram?
Yeah, I think Shriram Finance is something, which I do like. Piramal, I'm unfortunately not tracking, so I'll not have a view over there. But if you look at the charts of Shriram Finance, I think, this is a stock which is given a big breakout day before yesterday with a gap up, and then it was consolidating. But today, yesterday, sorry, it picked up and has started moving up. Now, it has completed what I would call the classic, cup formation or rounding formation on the weekly charts. Typically, this will give you measuring targets of around 1900 plus. So extremely positive on the charts of Shriram Finance, and this week's low or the gap up level, which was around 1450, I think is my trend reversal point. So you can buy here, add more on 30-40 point kind of a decline, and keep a stop below 1450 and look for a positional swing kind of a target of around 1900.
Okay. By the way, just want to mention, thanks Mitesh for that. Thanks for joining in. Shriram Finance is the big mover, up almost about 10% right now. Just want to mention a couple of more stocks. Subros is one stock that has been in upper circuit for the last couple of days. Yesterday, Subros was up 20%. Today as well, in all likelihood, it will be. At least that's what the pre-opening rate is suggesting. And as we were telling you, all truck cabins will now mandatorily have to have air conditioners from 2025. That's what Union Transport Minister Nitin Gadkari has said. He's issued an approval for that. So Subros, manufactures air conditioners for trucks, for passenger vehicles. Hence, it would mean more business for them. That stock is up another day in the green. And a couple of other names actually in the broader market. Excuse me, something like a Jamna Auto also looking pretty good. Rajesh Palvia is waiting by to give us some cues in the derivative space. Let's go straight to him. Rajesh, what are you looking at today in terms of individual names?
So, good morning, Sonia. So, stock specific, we are bullish on LIC Housing Finance. Stock has given a breakout about 200-day moving average, and the kind of buying action we have witnessed in the previous session. It clearly indicates that the stock can move further higher from the current level, and possibly we can see a target of 405 to 410 in the continuation of this pullback. One can keep a stop loss of 382. Another stock which we like, that is from healthcare space, that is Metropolis, is looking very attractive. Stock managed to view breakout of its multiple resistance zone area, and a long build-up was there in the previous session. So looking at the setup, we believe that Metropolis can scale up further higher. 1490 to 1510 could be the possible target in the near term. One can keep a stop loss of 1400. And the third stock is from FMCG space. We like Godrej Consumer Product, and stock is continuously moving in higher top, higher bottom formation. And the recovery which we have seen in the previous session is clearly indicating that stock will resume its uptrend, and possibly we can expect a target of 1120 to 1130 in the continuation of this uptrend. One can place a stop loss of 1055 to buy Godrej Consumer Product.
Okay.
Okay, well, Rajesh, thanks very much for that. Well, time for our momentumizer idea of the day. Mangalam is standing by with that. Mangalam, hi, morning.
Good morning. So the stock on my momentumizer list today is Rosel India. It was up around 3.5% yesterday, but I was looking at the move on this stock. This month itself, it's up around 22.5%, and in the last 12 months, it's more than doubled. Importantly, it's gaining on huge volume. So I was trying to look at, what the company does. So it's got two sources of revenue. One is black tea, and the other one is aviation products and services. Divergent as they are, over the last couple of years, their revenue contribution from tea is coming down. So FY13, tea accounted for nearly 90% of their sales, and now that's come down to less than half of their sales itself. Whereas aviation business is increasing in contribution from 100 crores in FY19. We've seen FY23 aviation business come to around 186 odd crores. All of this with the company's debt coming down from 195 crores a couple of years ago to a little under 150 crores now as of last year as well. The promoters hold around 75% stake in the company, with institutional shareholding increasing in Rosel India as well, which was nothing as of September 2021, but has come to over 4% as of the last reported number. So what are the key triggers to watch out for? The aviation business is largely out of the country right now. So increasing contribution coming in from aviation, from their domestic maintenance, repair and overall business is something we'll be watching out for. Defense supply in India is something we'll be watching out for. And finally, demerger of two divisions for value unlocking.
Okay, all right, Mangalam, got that. Thanks very much. That's today's Momentumizer. By the way, I just want to point out one more stock in the pre-open. Check Subros. Yesterday, Subros ended up on 20% circuit because Mr. Nitin Gadkari made that point about air conditioning in the cabins, in the truck cabins. Today in the pre-open, it's suggesting that we could get more follow-through buying there. So that was a big, big mover. We'll keep an eye out on that. Nimesh, I think, is with us as well for the standout brokerage report of the morning. Nimesh, which stock is it?
Hi, Sarvesh. Today's standout is on Divi's Labs. Yesterday, Kotak had a sell report. And today, BofA Securities has downgraded the stock to underperform from neutral, and they cut the target price in divis labs to 31.50. Now, they believe after the recent run-up, the stock is now trading at 56 times FY24 estimated earnings, and there is a risk to the downside. Now, while the synthetic projects will drive the earnings in FY24, but the pace of the earnings could be much slower than what the street is expecting, and that's not priced into the current peak valuation. So that's the reason why they've downgraded the stock. Now, they see FY24 and FY25 margins to be in the range of 30 to 33%, which is higher than the first half margins of 25-26%. But the pace of earnings is going to be slower than estimated, and hence they've downgraded the stock now to underperform from neutral, and they've cut the target price in divis to 31.50 now.
Okay, thanks a lot for that. Well, Vivek is also with us to talk about Shriram Finance and the MSCI impact. Vivek, over to you.
Well, that's right. So, post the block deal that just consummated, where, we understand that it was Piramal Enterprises that sold their entire 8.3% stake in Shriram Finance. Now, what we are analyzing is the impact of Shriram Finance and how will index providers like MSCI, FTSE as well as NSCI index providers, how will they now treat Shriram Finance after this particular block deal, given the fact that the free float has now increased? So as per IIFL Alternative Research, what we understand is that in the MSCI index, remember Shriram Finance is part of the MSCI Standard Index as well as FTSE indices. So in MSCI index, the stock is likely to see inflows of close to $45 million. In the FTSE index, the stock is likely to see inflows of close to $23 million. And both of this will happen mid-review season itself. Lastly, within the NSCI indices, now very interestingly, Shriram Finance actually in terms of the average weighted market capitalization ranks 101. So what they believe is that the stock could likely be an inclusion into the NSE 100 index, where once again, tracking flows could come in. So all of this will also keep Shriram Finance in spotlight today.
All right, thanks a lot for that. So that's on Shriram Finance. But Surbhi is back with us to talk about the AMCs and why she's watching that one. Surbhi, over to you.
So HDFC AMC was in focus yesterday on the back of the news flow that Aberdeen has sold its entire stake in the company. Now, interestingly, apart from the small cap World Fund and Society General, who were one of the buyers, SBI Mutual Fund was also another buyer of this block deal, and it is one of the competitors for HDFC AMC. So Kotak has also written on AMC as a whole, and they are quite positive on that. In that space, they say that the undue investor concern that the high pass-through of the TER cut with the distributors has a high bearing on AUM growth. But they say AUM growth is likely well protected from the induced churn, and the incremental flows are much more responsive to the performance rather than the lower commissions. They say for HDFC AMC, the flows have been meaningfully revived in the last 6 to 12 months compared to the industry despite the lower commissions. And any impact on the growth due to the lower commissions could be compensated through stronger alignment with the new parent. They have a positive view on all the 4 AMCs with an ad rating on Aditya Birla, HDFC and Nippon AMC, and a buy rating on UTI AMC with a target price of 800 rupees.
All right, Surbhi, thanks very much for that. So keep an eye out on that big move on HDFC AMC yesterday, as you pointed out. Blue Dart in focus. Mangalam is here with more. Mangalam.
Motilal Oswal has upgraded Blue Dart this morning, and they've upgraded it from a neutral to buy. That's largely because the stock, one, has corrected 30% from the high. Secondly, it's attractive right now largely because 40% of its costs are aviation turbine fuel, which has also seen a big correction. So they stand to benefit from that. In the second half of this year, they expect that the 2 new aircraft that the company have added will also aid their volume. So which is why they have a target price of 8,040 on the counter.
All right, thanks a lot, Mangalam, for that. We're just heading into the market opening, and looks like it's going to be a decent opening for the market, up about 30 odd points on the Nifty. We're still just 40 points away from that all-time high, so we're pretty much flirting with those levels. Do we get there today? Do we hold above that? Time will tell. But for now, the mid-cap index is looking like it's going to have a pretty strong showing this morning. Let's see how things go from here. A lot of individual stocks in focus, and let's get straight to that very quickly. The Nifty, the first tick is in the green, so up about 20 odd points. The Sensex is up about 100 points, and the mid-cap index is up 250 odd points. So a decent opening, you'd have to say, for the frontliners, but all the action yet again is in the broader market. Zooming away now on the mid-cap index, up almost 1%, 0.8% to be precise. In the frontliners, as I was mentioning earlier, IT is making a bit of a comeback in the last few days. HCL Tech, TCS, Wipro, are all your top nifty gainers. Is the worst over for the IT sector? We don't know yet. But for now, there's definitely some buying action that's picking up there. Apart from that, cement is seeing its share of buying. Ultratech Cement is up about 1%. Dr. Reddy's has been a pretty strong stock. In fact, this year, Dr. Reddy's is now up about 20%. So, it's notched up a goodish amount of gains. And some of the auto stocks, Bajaj Auto, Hero, Eicher, are all doing pretty well, up about 0.4%. In fact, the headline index may be flat, absolutely quiet, but plenty of stocks are at fresh 52-week highs. Tata Motors is at a fresh high this morning at 583 rupees. It's now up 50% for 2023 already. Exide is at a fresh 52-week high. L&T Finance at a fresh 52-week high as well. And plenty of other stocks. Britannia is sitting at a fresh high too. So this entire FMCG pack is looking pretty good. But on the downside, what's dragging is Divi's Labs. Divi's is down 1.5%. As we were telling you, there's a downgrade from BofA Securities which has come through. JSW Steel is down about 1%. Hindalco, Cipla, Sun Pharma are all in the red. So Pharma is taking a bit of a backseat this morning, apart from which Axis Bank is also down about 0.3%, dragging its feet. Reliance is the one that's just playing spoilsport, preventing the Nifty from getting to all-time highs. Reliance absolutely flat with a bit of a negative bias. But other than that, it is a quiet market, just buying time, around this 18,800 mark, consolidating at these levels. But the real party is in the mid-cap.
I was just going to say nothing quite about the mid-cap opening and the mid-cap markets, right, Sonia? Look at the index go. I mean, straight away 1% higher. Nifty is doing nothing, zilch. Mid-cap index at the open up 1%. That's just the extent of the momentum out there. Z is trying to recover some ground. Yesterday, Z ended 6.5%. A lot of people raising questions on the future of the Sony Z deal now, given that things are really stuck in court. Anyway, that stock started positive for the time being. Piramal Pharma. I mean, let's go over the newsmakers first of all. So, Piramal Enterprises actually and Shriram Finance are the stocks where there's a 10% up move immediately after the block deals. Subro is a stock that Sonia and I were just referring to. Another 20% circuit on Subros. 20% yesterday, 20% today because of this mandatory AC cabins in commercial vehicles now. So that's a stock that's in a sharp focus. Thyrocare after the block deals continues to find some traction, 2.5% up. GR Infra Projects, they've announced a couple of order wins. That's a stock up about 3%. So it's really, really buzzing out there in the mid-cap market. RVNL, which pretty much is saying that, look, we're still in the game. Don't write us off with respect to that Vande Bharat order. That's a stock up to 2.5% as well. So quite a few moves in the mid-cap market, at least for the time being. But on the large-cap screen, Prashant, I mean, there's not much changing. It's very difficult to spot sectoral trends as well. I guess absolutely clueless, directionless, at least for now.
Looks like it. One name which is coming up on the downside is Aptus Housing. I mean, that's a small housing finance company. I'm not sure if there's a block. Maybe there is a block which has happened. Volumes are huge. And by the way, in names like Aptus and, Home First, etc., there are private equity investors who and there has been this talk, and we've put this to the managements quite a few times when they've been on the channel, whether there is intention to sell, etc. It's been expected, anticipated, but maybe something has transpired.
Yeah, there is a block, Prashant.
Yeah, there is a block. It's down 7.5%, 246. Okay, now, so that's on the downside. But on the upside, apart from what we've already mentioned, look at Z. Z sold off 7% yesterday. It's coming up 6% this morning. It's the second largest volume traded name across the board. So that is coming up. And I think there's an article in the Mint newspaper which says that, the Sony Z deal is, it's on track. That's what the headline reads. But, maybe a bit of a boost there sentiment-wise, although there is, the developments there will need to be watched. But the stock's recovering for some of the yesterday's losses. RVNL sold off yesterday. That's up 3%. We mentioned that. Exide is up about 2.25%. What else? Subros, we mentioned. Max Financial Services, MFSL. It's the underperformer in the life insurance space. HDFC Life, ICICI Pru, etc. have done much better. 2.5% higher on MFSL. Piramal Pharma, Piramal Enterprises, of course, is locked up. There is where the deal has happened, but Piramal Pharma is up about 3.5%. That has also been after the demerger. It's been a huge underperformer. But lately we've been hearing some recommending Piramal Pharma as a value buy. Metropolis is up about 2.5%. Thyrocare is up a little bit, 3% or so. CG Power is up about 2%. a rate gain. It came back above the 400 rupee mark yesterday, gaining another 4% this morning, 425. I saw Gokuldas exports, right out of the gates. Gokuldas has reclaimed 500 rupees yesterday after some time, and I think that is starting. Okay, that's actually flat, 507 or so at this point in time. So it's a market with lots and lots of activity, but the two big ones are, of course, Shriram and Piramal Enterprises. Both are up 10% respectively. Sonia.
And a lot of these stocks, right, that have their interests across some of the newer spaces, whether it's technology, big tech, electric vehicles, once again coming back into action. Just look at something like Tube Investments. It's up about 3.5%. It's had a big rally in the last many months. KPIT Technology has come back in a big way as well. 3.5% higher on KPIT Tech. And, this month, KPIT Tech is up almost about 5% or so. In fact, for the year, KPIT Tech has put on almost 55%. So just pull up the yearly chart since the start of 2023. Big moves coming in there. Exide is also coming back in a big way. It's up almost 30% for the year now, Exide. So some of these battery makers that are making investments in the EV space are also doing pretty well. So just keep an eye out on these themes. All the new themes, the, exciting themes are getting action now.
By the way, railway stocks, your Ircon, your Texrail, some movement there as well that's kind of back. Aside of all the Vande Bharat issues, some of the other railway stocks also perking up. Ircon is up about 5%. Okay, it's cooled off. Started up 5, now it's cooling off right now. So is the market. The metals, Hindalco, these are names. JSW Steel, they're weak. Divi's, of course, on that downgrade. So I think overall, fairly muted start to the day.
As stocks are coming up, right? I mean, the reclaiming levels. Look at something like a Muthoot. It's not a big move, but it's back above 1,200 rupees after, I think, some time. So leave no man behind. I mean, leave no stock behind. And that seems to be happening. It's a rising tide lifting most boats. Of course, Muthoot has indicated, better trends over the last 2 or 3 interactions, saying that competitive intensity, etc., has gone down. But there is a fair bit of traction now across the board. By the way, the Nifty's picked up. It's up 18 points from being flat, 18,835. Manishi Ray Chaudhary is now joining us, Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. There was a note from Sanjeev Prasad of Kotak saying that the rally in broader markets and the way we've seen over the last 1-2 months kind of is making it harder and harder to find ideas. Although when you look at price action and the way stocks are being bid up, I don't think there is any dearth of ideas, at least momentum. What do you make of it, especially the move in the broader markets, Manishi?
Right. So valuations are a bit.
Okay, I think we are having some issue with the line. We'll try and fix that and go back to Manishi in just a bit from now. Some technical difficulties, what it seems to be. Okay, Manishi is back with us. Let's give it another try. Manishi, go on.
Right. Sorry, yes, I'm back. Thank you. And, I think, the valuation question that you raised, that is justified. Earlier, not in the last couple of weeks, but prior to that, the rally was essentially in the large cap frontline names. And therefore, when investors try to search for ideas in the frontline names, maybe in the top 50 or top 100 stocks, valuation could be a bit challenging. But at the same time, I think now what we are seeing recently over the past 2 or 3 weeks are the mid caps and small caps catching up. And that could happen going forward. I mean, I think the next leg of the rally is being led by the mid caps. But at the same time, from a foreign investor's perspective, the kind of investors that we interact more with, that struggle to find attractive ideas in India at a reasonable valuation could be a challenge, because the relative valuation, valuation premium rather, which had actually contracted quite a bit in March, April, have picked up again. It has gone above the 1 standard deviation level. So, I think for the near term, the market could take a bit of a breather, maybe what's called a time correction in the stock analysts' parlance. I think we may be looking at that kind of a scenario throughout summer.
Okay, so time correction perhaps on the cards. For as long as I've tracked the markets, I've understood that time corrections are perhaps the best time to accumulate individual stocks. You get a chance to buy stocks, not when the market is soaring and not when the market is falling, right? So tell us, what should you be buying at this point in time? In the consumption space, autos have been doing very well. And there's this theme of how exports have bottomed out, the worst is behind us. Within that theme, anything that you like?
There are three sectors in India which are seeing consistent earnings estimate upgrades. The first are financials, which the consensus earnings estimates have been upgraded almost 10% over the past 6 to 9 months. The second are industrials, where I think this whole, idea of increased infrastructure investments and therefore spilling into private capex at some point of time, that idea is now picking up. And the third are consumer discretionary, and that is where autos fits in, what you pointed out just now. So consumer discretionary, that include white goods, includes jewelry, includes automobiles, particularly four-wheelers, not so much two-wheelers. So these are the sectors that we are also looking at. In fact, in our Asian model portfolio, if I look at the India sliver in that, these are the three sectors that we have presence in. And in addition to that, we also have a presence in TMT, the tech and telecom universe. Even though tech has been a bit muted over the last 6 months or so, there have been some, sort of, I wouldn't call them warning, but cautionary stance sounded by some of the frontline companies as far as order inflows are concerned. But we still like that sector, in view of eventual recovery in order flows from the developed world.
All right, got that. Manishi, hi, good morning. I want to get your sense on life insurers, because that's been one red hot area of the market after it was practically written off, in February after the budget. And now suddenly the market seems to have, taken a liking to it. What's your sense and what are your recommendations on life insurers or insurance in general, actually?
Right. So, when I talked about financials, with the consistent earnings upgrade, I actually include the life insurers in that bucket. We have, quite contrary to the market perception right after the budget, we have actually liked the life insurers. And, we have, not too many, but I think just one frontline life insurer among the India stock selection bucket that we have in the Asian portfolio. We believed that right after the budget, because of the tax related to the changes in the tax policies, the sector was beaten down too heavily, and that was unjustified, because the essential story here, which is of increasing penetration and the earnings growth driven by higher interest, higher returns to the life insurers, that story actually stayed intact. And I think the market is actually coming around to that view.
All right, before we let you go, what would the mega theme or the big trend be for the rest of 2023, you think, especially from an equity market perspective? Are you looking at any big themes? I mean, of course, some of them have played out, whether it's something like defense or even electric vehicles. Anything else that you like?
I think in general, one should look more at the infrastructure and industrial, that space. This consumption story has possibly, I wouldn't call it played out, because this is a multi-year theme as far as increasing consumption and increasing penetration in India are concerned. But industrials, both in terms of increasing government capex and eventually increasing private capex, maybe even defense capex, these are the themes that investors would have to more actively look at right now. I think, it started performing, but it's still early days there.
Shriram Finance, by the way, is up 12%, 12.5% now, I think. So it's moved up a little bit more. The high, which has been made, is almost $1,800, 1794 or so, and now at about 1750. That's a surge which has come through. Do you track this one, Manishi? Any thoughts at all? And I mean, large number of blocks happening, right? We put out a figure, right, some 14,000 crores of blocks which have happened just in the last, I think, 1 or 2 months or so. And So people are monetizing. I mean, private equity investors, promoters at high levels, but all of it is getting absorbed in a very seamless way. Any thoughts at all, briefly?
Yeah, I think, I obviously wouldn't comment on individual stocks, but, this the phenomenon that you refer to, which are the promoters and, they're taking advantage of large blocks, it's likely to continue because, this is not only an avenue for private equity investors to make an exit. It's also an avenue for the promoters to sort of realize the value of the investments that they had earlier made. And it's now that, as a consequence of the Indian market's performance, as a consequence of the support that they're getting from the domestic flows, which has become a, routine feature of this market, that this avenue has become feasible and it's likely to continue going forward.
All right, Manishi, we'll leave it at that. Appreciate your time here on CNBC TV18. Thanks a lot for joining in and have a great day. Well, for the market is having a great day so far. The Nifty is up about 50 odd points, just inching towards those all-time highs yet again, flirting with those levels. Remember, we're just about 20-25 points away from all-time highs. The real party is in the mid-cap end of trade, which is up almost 400 points. But on the occasion of International Yoga Day, we speak to one corporate thought leader who has been a proponent and active practitioner of yoga for, I think, over 2 decades now. Rajiv Bajaj, Managing Director at Bajaj Auto, is joining in. Rajiv, always a pleasure speaking to you here on CNBC TV18. For as long as I've known you, yoga has played a very important role in every stage of your life, right? But I think it's when times get tough that the practice comes to your aid the most. And in the last 5 years, it's been a really tough phase for you, perhaps, with both a major health scare and a personal setback. How has yoga helped you through it all?
Well, good morning, Sonia. And first and foremost, greetings to everyone on Yoga Day. I live in Pune, and therefore I had the good fortune of being a student of Guruji P.K.S. Iyengar for the longest time. And I learned a few things about yoga from him. To start with, Guruji said that the body is universal, the mind is individual, and hence all problems of the kind that you mentioned start with the mind. And I think we all acknowledge today that, whether it's eczema, asthma, irritable bowel syndrome, rheumatoid arthritis, thyroidism, diabetes, hypertension, cholesterol, what have you, these may manifest in the body, but these are essentially diseases that are rooted in the mind. And I think yoga, simply put, helps us to calm our breath and therefore to calm our mind. And this is why Guruji would say, let the breath be your teacher. So I think yoga, more specifically the asanas of the kind that you've put on air right now, help us to use the body to turn the mind inwards, away from the stress of the outside world. And that is why Guruji would say, yoga teaches us to cure what must not be endured and to endure what cannot be cured.
That's fabulous. Rajiv, I think I have tracked not just your business, but your yoga practice over the years as well. I remember visiting the Prana Center in Pune too. And I noticed that with every passing year, the poses get even more complex. And I mean, we were just looking at some of those visuals. I don't think people 20 years, 30 years younger than you can even do that. But that's great to see. But from a business or from a, sort of a life lesson standpoint, what is the big takeaway for you over the last, say, 2 decades? What's your biggest life lesson been from yoga?
So, Sonia, first of all, please don't imply that I am old. And let me give you an example from 2012, when I had hurt my back quite grievously. I was advised 3 weeks of bed rest and possible surgery, spine surgery after that. Guruji heard of this. He asked me to come and see him. I was too scared to go to him because he was a tough taskmaster. But I was even more frightened of a knife in my spine. So I did go to him. Under his personal supervision, he made me do 2 hours of yoga. And I was amazed at myself because I was in so much pain that at home I was not able to stand under the shower for 2 minutes. And here I was doing back bends and sirsasanas. And I asked him, I said, Guruji, I feel 30% better at the end of 2 hours of yoga when I was actually advised bed rest and surgery. So, how do you explain this? And he said something beautiful to me that day that has helped me in my work as well. He said, the surgeon believes that function follows structure. If he fixes your structure, you will start functioning correctly. He said, we in yoga believe that structure follows function. If you start standing correctly, sitting correctly, twisting correctly, bending correctly, stretching correctly, then your structure will adapt, because the mind is not only in the brain. There is intelligence in every cell of your body, and every cell will adapt to the correct way of functioning. From this I learned, for example, that at work, if we focus on technology structure, brand structure, cost structure, distribution structure, organization structure, we won't necessarily function right and make a great motorcycle. But instead, if we function right and try to make a great motorcycle, all these structures will fall into place. So I learned a lot of yoga aphorisms, as I did even from homeopathy, and applied them to business. That is why I say to people, our motorcycles are as much a product of CFD and TPM as they are of yoga and homeopathy.
Oh, that's, you've learned a lot, and you express it so well, Rajiv. And that is what that is what makes it so wonderful to hear. So much wisdom there.
Thank you.
By the way, that the headstand that we were playing visuals. Actually, I was trying to see if there is something behind. That seems complicated, as Sonia also said. That is
no support.
That's perfect balance, right? Is that one of the most difficult poses, Rajiv, or?
Yes, that is at my place in Goa. There is nothing behind me except a glass railing.
Of course, there is nothing. I was just joking.
but my father would say कि शीर्षासन तो कर लिया, but he still cannot stand on his own feet.
Well, trust.
Fathers have a way of keeping us grounded, right?
Absolutely.
And Rajiv, we all remember. The veteran, the patriarch of the Bajaj family. I lost my father a couple of years ago, but the father's teachings completely stay. That's all I'll say. I'll come to the business conversations in just a bit, but Prashant, back to you.
No, I was just Rajiv, would you like to just you said Guruji was telling you about cure, what cannot be cured, and could you just repeat that for our viewers? That bit.
Guruji said, and the choice of words, Prashant, is very beautiful. He said, yoga teaches us to cure what must not be endured, and to endure what cannot be cured. So he's telling us that there's a lot that you can fix through yoga, primarily asanas and pranayamas, by turning your mind inwards, hopefully aligning it towards a higher purpose in life, to find what we are all looking for, which is nothing but the joy of peace. But at the end of the day, you must also accept that, acceptance is an important part of it. There are some things that will never be cured. We are human after all. And yoga will give us the strength to cope with that.
Okay. On that beautiful note, Rajiv, now let me try and steer the conversation towards the business and towards what's really top of mind for you.
Sure.
Because there's so much happening, right? There's the Triumph launch that everyone's talking about. There's this fantastic fight in the 125cc segment that Bajaj has been putting up, gaining market share. It's been a very interesting last couple of months. And then there's the export issue with Nigeria, which has been struggling for a while. Last time we were speaking with Rakesh, he was telling us expect a pickup in July. So these are three different sort of balls I suppose you're juggling at the same time. So tell us, what is top of mind, and what's the immediate focus for you when you look at the business?
I can elaborate on each of these. Triumph, I'm headed off soon for the launch in London, as I had said to all of you a few weeks back. The first two motorcycles of the many that we are developing together. Production will begin in early July. Deliveries will begin in July. Obviously, more details of the product, the prices, stuff like that will be closer to that time. But maybe in the interest of Nigel, I can say this. this that we are trying our very best to hold the price closer to 2.5 lakhs than to 3 lakhs. So hopefully Nigel is happy with that. So that's about Triumph. That will roll out of our new plant at Chakan, which has already been commissioned. We call it Chakan 2. KTM production is shifted there, and we have capacity in place, I think, for about 6,000 or 8,000 Triumphs every month over there. On the 125cc segment, yes, we have consciously chosen to focus on the 125cc plus segment, so 125cc and above. I am motivated in no small measure by the great success of my younger brother, Siddharth. And if he can do so much just participating in the 350cc segment, surely we can do a lot more with 125cc plus. We've gained a lot of share. You're quite right. I think our share in the 125 is just under 30%, and in the 150cc plus sports segment, as we call it, is just above 40%. Some of that is due to the absence of HMSI in the market, though at a Vahan level, HMSI has been present. So we are quite confident of maintaining these gains as we go forward. The 100cc itself, we are less focused on for obvious reasons, and I think three factors influence that and continue to influence that. One, that's the customer whose sentiment was most impacted by the lockdown. That continues to be an issue. Two, that's where petrol prices hurt the most, and I think people are, being weaned by EVs from there more than anywhere else. And finally, yes, the premiumization to 125cc. So all in all, I would say, while Hero with 80% share over there would like to expand their core, as they call it, we are going to do everything to shrink that core. As far as exports is concerned, I will give you some specific news. From an average of 200,000 a month a few months ago, we had come down to about almost half at 110,000 a month. Last month we were at about 120, 125. This month looks more like 140,000. Hopefully next quarter is more like 150,000. So as Rakesh has been saying, uncertainty is a big factor. I may change my view in 2 weeks' time, but right now it looks as if it's bottomed out, it's turning upwards, including in Nigeria, where there is devaluation because we expect the dollar to become available more freely. So all in all, it's looking better.
So when you said, I want to talk a little more about exports, but before that, when you said this will make Nigel happy, I thought you were going to gift him a new Triumph bike or something. All you're doing is just reducing the price a little bit, right?
Nigel, let him talk to me. I'll talk to him.
Okay, we're all looking forward to that launch. Actually, it's going to be a big one for Bajaj Auto and for all the enthusiasts, right? The bike enthusiasts. But just one more word on exports. This devaluation that has happened of the Naira, it's another 30% depreciation that we've seen. Will it, I understand that, it may sort of defer your timelines a bit. Earlier you said by July exports will improve. Now maybe it may derail it further. But will it have a really big impact? And, what can we expect in terms of an annual run rate for exports now in FY24, both for the industry as well as for Bajaj Auto?
It's hard to say. As I said, it's very uncertain. One day we hear of three-wheelers being banned in Egypt. The next day it's motorcycles being banned in Iraq. The next day Argentina can deal only with RMB. The next day Nigeria devalues by 30%. Who can predict anything? It would be very speculative. But I can definitely say this at this moment, that I don't think what we said for July needs to be deferred. As I explained, we are already coming back to about 140,000. Hopefully next quarter looks like 150,000 if there are no new nasty surprises. So, we are coming back to about 75% of the normal. And, in the bigger picture, price increases do get absorbed and consumers do adapt, because at the end of the day, what we are selling them is not luxury. We are selling them something they need, which is a basic necessity of life, to go to school, to go to work, to go to shop, to socialize, so on and so forth, or even as a motorcycle taxi in Africa. So, and the OPEX is still very favorable, So price increases have happened before. for various reasons in various markets. Markets have come back, so I'm not unduly concerned about that. We are focused on our products, on our distribution, on our sales and service activation. So we feel confident.
Okay, just one quick question before we let you go, because, this is the hot topic at the moment, this discontinuation of the FAME subsidies, right, from March of 2024. Right. I know your view on this, but do you think that the timing of the subsidy withdrawal may not be right? And in that context, it may end up derailing this whole, EV transition that we are expecting?
My own personal view, frankly, is that the correct time to do this is earlier the better. You know my view. I have said that over 30 years, so many innovations came into the ICE engine, which was a simple two-stroke air-cooled engine meeting no emission norms, to where we are today. And I can list up 30 technological innovations that came in over 30 years without any subsidy. And therefore, I feel, I don't understand why governments all over the world think that subsidies are going to drive sales, because in the end they're not sustainable. The money needs to go into that which can create the right environment for EVs. So be it charging infrastructure, be it special lanes, addressing battery disposal issues, etc. Hopefully we are moving in that direction.
So Rajiv, this is not altering your plans with respect to the Chetak, and the rest of the EV trajectory at all, is the sense that I get?
Oh, absolutely not, because, I was very fortunate to be part of Bajaj when we transitioned from scooters to motorcycles. For me, 30 years later, this is a sense of deja vu, motorcycles to EVs. As much as our goal 30 years ago was to be the world's most versatile and complete motorcycle maker, which I think we have achieved. We have become the world's most valuable motorcycle maker last year. I hope we can repeat the same thing with EVs. I hope lightning strikes twice. And if I may lean on Elon Musk, we will do all we can humanly possible to make that happen.
Well, very timely leaning on Elon Musk. We just saw that picture of Elon Musk with Prime Minister Modi, right, doing the rounds on Twitter. But Rajiv, always great speaking with you, and happy Yoga Day once again to you. Thank you for not just the yoga lessons, but life lessons as well.
Thank you, everyone. Happy Yoga Day again.
Right. Let's slip into a quick break on that note. We've gone on for a goodish bit. When we come back from the break, we'll be in conversation with the management of BSE. The stock has been a big winner in the first quarter this year. S. Ramamurthy, who's the MD and CEO of BSE, will be with us to discuss their business momentum. We'll also be joined by Prem Kishan Gupta of Gateway District Parks to discuss their business outlook. Stay tuned.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms.
Welcome back. Well, let's continue with the corporate conversations. Now, BSE is the next company on our radar. It has been a big winner in the first quarter this year, up 35% in the last 3 months, witnessing a big swing from about 407 in March to 577, 578 actually today. S. Ramamurthy, MD and CEO of the Bombay Stock Exchange, is with us now to talk about some of the details in the business, a lot of the new innovation that they have been undertaking. Thank you very much for joining in, Mr. Ramamurthy. So let's start by, talking about this recent move, CDSL block, and now, at that 15% mark, which is where you're at. Are you looking to sell any more stake in the depository?
You are right when you stated that there are regulatory requirements on the maximum amount of shareholding which as a stock exchange BSE can have in the depository. So the block deal was to ensure that we are in compliance with the regulatory requirement in this regard. You are perfectly correct there.
Okay, so just to understand this, you sold off around, I think, 4.5%, right? So that would have fetched you about, what, 350 crores? What are you planning to do with the funds? Is there a special dividend, or are you going to reinvest it in the exchange infrastructure?
See, any of these activities in this regard will not be individually decided. It will be subject to the decisions of the board along with the relevant committees in this regard, considering what would be in the best interest of the shareholders.
So volumes of BSE's newly launched weekly options are likely to be affected with NSE's latest move to shift the expiry of the Bank Nifty to Friday from Thursday. What do you make of it, and what is your own assessment of the impact this will have on your business?
So, as you are aware, May 15th, 2023, we relaunched Sensex and Bankers derivatives. We started with a very humble volume of around 50 crores on the first day in terms of the notional value. The volume started picking up because the number of participants have increased, the number of investors have increased, the number of softwares which are providing support to the BSE's equity derivatives platform has increased. Overall, there is a good amount of interaction with the market participants on this product. The product has consistently grown over this last 5 weeks, and on last Friday, as you would have seen, we traded around 57 lakh contracts with a peak open interest of around 3.3 lakh contracts. The product is receiving good amount of attention. 2 weeks before, I guess, there was a circular requirement from NSE where they have shifted the expiry of Bank Nifty to Friday. We need to wait and watch how this turns out in respect of volumes for Sensex derivatives. Post this announcement as well, the volumes in respect of Sensex have not been affected till now. We will not know how, therefore, from June 14, that's what, July 14 is, I think, the date from which the Bank Nifty expiry will be on Fridays. So we need to wait and watch how it impacts the volumes at BSE and how it impacts the volumes at NSE as well. So based on whatever we see as the impact, if there is a need, we have to rework on what our strategy should be in terms of what should be the expiry and what we should go about. At this point of time, we are waiting to see whether the market participants are okay with this shift. If not, is there a probable change? If so, what we should do? If not, what we should do? We are just waiting and watching at this stage.
All right. Well, you know, NSE is launching the SGX Nifty trades from GIFT City in July. That should draw more volumes to the exchange. Can you tell us what are your own GIFT City plans?
We already have an exchange, and we also have a clearing corporation of BSE in the GIFT City. Actually, that was the first exchange to come into existence in GIFT City, and they are doing good volumes in multiple products. The efforts will continue. If the presence of this new venture in GIFT City improves volume, as you say, I am sure the entire ecosystem of GIFT City will be benefited, and it will be in the benefit of the entire nation and will be in the direction of Prime Minister's vision. That will be the duty of every one of us to make it succeed.
Well, well put, sir. Thank you very much for joining us. Good speaking with you. Appreciate you joining in here on CNBC-TV18 with that perspective. Well, you know, the market has crept up 50 points, by the way, which means that once again, new highs are in sight. So keep an eye on that number as well, 887. We're at about 870 right now. The next management we have with us is Gateway Distriparks. It's a logistics major. Kotak Equities, the broker's recent note, has cut its EBITDA estimates for the company by 3% and expects their container freight station business to be under pressure. In fact, Container Corporation has itself cut prices by about 8 to 9% across key markets. To assess the impact on the business at Gateway Distriparks, we have Prem Kishan Gupta, Chairman and Managing Director at Gateway Distriparks, joining in right now. Thank you very much, sir. Good to have you with us here. Let's just start there. The CFS business. what is your own assessment of what FY24 will be like? Do you agree with the Kotak analysts' expectation that that business will be under pressure this year?
Good morning, Prashant. As far as CFS business is concerned, the first 2 months is flat. So we don't expect that we'll go down from here because last year itself the volumes went down in CFS business, and May and June, though exports are less, imports are more. But overall volumes are flat, and we don't see any pricing pressure as of now. But going forward, if the volumes come down, I mean the imports or exim cargo comes down, then of course everyone will get their market share, and then there will be stiff competition. As on date, June might have some lower volumes because of the cyclone effect. The vessels could not rotate themselves, but otherwise everything so far at CFS is good.
So you are not looking to then bring down prices? Can we say that? Are you seeing a lot of competitive intensity in the market?
Yes, the competition intensity has been there for many years now because there's too many CFS and the trade has not grown to that level. But I think we have come to a level where, I mean, anything lower than this will, have impact on all the CFS operators. So I would just say that we would like to maintain the present volumes and the margin, and we don't expect any uptake from here in the CFS business.
All right. So, can you just tell us overall what kind of volume growth are you expecting in the both in the CFS business as well as overall for FY24? I think the last time you said you're targeting a flat growth in the CFS business, but for the for the consolidated business, what is the growth looking like in terms of volumes?
See, the rail business is doing well, and in the first 2 months of this year, we are up by about 15%. Again, the split is different, where imports are up by 35% and exports have dipped by 6%. And we will continue with this double-digit growth throughout the year. There is no doubt about that. June, again, it has been affected by a cyclone and some power grid failure. But that does not mean that the volumes of June will go away. The only thing is these will be carried forward in the next month. And we can see good visibility. Exports have, though slowly, but I mean there's an uptick in the exports in some markets. So we still maintain that our growth will be in double digit in the rail business.
Okay, by the way, folks, the market, the Nifty is, I think, just about a few points away from that all-time high. 18,888 is the all-time high, and the Nifty, the distance to the all-time high is less than 15 points. So, well, here we are within kissing distance of those all-time highs. It's just a number, so we're just... we are missing the woods for the trees, really. We are virtually at all-time highs, but just that, momentous moment when you sort of hit that level and conquer it. So we'll keep tracking that for you very closely. Sir, I wanted to understand, you were speaking about volume growth, etc. But this Jaipur ICD terminal will be operational, I understand, from Q3 of this fiscal of FY24. Once that comes through, then what is the kind of jump that we can expect both in revenues as well as in volumes?
Well, Jaipur might be delayed to fourth quarter of this financial year. So this year we won't see much of the volumes coming from Jaipur. But next year it will be a full year of operation. So that is the time when we can expect, additional growth from Jaipur market. So this year we will still like to maintain 15% unless again the exim trade grows up, especially the exports. If exports pick up, which we see that to Europe, the exports are down, whereas in North America there's still a small growth in the exports. So exports volume will lead us to say even a 20% growth if exports pick up, because imports are increasingly coming into India.
Okay, well, we'll leave it there, sir. By the way, just one question before I let you go, and this is something which I think we put to you before as well. You recently increased your stake in Snowman Logistics. I think, Where do you plan to take it from the current 40-odd% that you own, sir, right now?
Well, you see, Snowman is our business, and people have been saying that it is our investment. But there was one point of time where we wanted to sell it, and the deal could not be consummated because of because COVID came in. And since then, we have been performing well in Snowman. So, as and when the cash flows allow, we will increase our stake in Snowman. So there's no deadline or something like that that we have to acquire so much to reach a certain level. But definitely, this business is doing well. You must have seen the revenue and EBITDA have grown considerably in the past 3 years. And this company is poised to do well. So we will treat it as our strategic business and not as an investment.
Sure.
So you would want to eventually, with no timelines or anything, would want to fully own it at some point?
It depends on the cash flows. Ideally, we should, but I mean, we need some cash at Gateway Distriparks to go to that level.
Okay. All right, sir. Got that. By the way, thank you very much for joining in. Good talking to you today. By the way, the grand old index has done it, even as we have our eye on the Nifty, which is still 15 points away from the mark. The Sensex has hit an all-time high. In fact, coincidentally, we were just talking to the BSE head a while back, and the grand old index has, conquered the peak. It's moved forward, and hopefully its, cousin, the Nifty, is going to follow suit as well. Just to put the number in place, 63,588.31. That is the new all-time high on the Sensex, and the day's just begun. So who knows? Maybe we'll see more momentum, and maybe the Nifty will come in and finally join this party.
Oh, absolutely. The party's just gotten started, right? So that's the big headline at the moment. The Sensex has hit a record high. But let's not forget that after 137 trading sessions, the Sensex is back at a record high, which means that it's not really covered too much ground this year. Give and take everything, the Sensex is up just about 5% for the year. So all the action has been beneath the surface, and now the headline index has also hit a record high. Taking you through some of the constituents that have, got the Sensex to this level. A lot of laggards of the last few years have come back in a big way. Case in point, something like an ITC, which is up 40% this year. You have UltraTech Cement, which is up 20% for the year. Power Grid, Nestle, Dr. Reddy's is up 16% for the year. And a lot of the large caps like L&T, etc., making their presence felt this year as well. So it's been a remarkable time. I mean, there's a lot of time correction that this market has seen. And now, sort of, let's see if, we build on to these gains.
I mean, I think we were at these levels in December of last year.
Yeah,
right?
December.
So, from
First December, I think, was the Nifty rally started pretty much, from there.
So the high was 18,887. That was December of 2022. There was a dip all the way. The low was made at about 16,820, which was in March of this year. And from there, we basically had 3 months. This is the third month of non-stop rally. So 50 points is what we have on the Nifty. But the Nifty and Sensex can make new highs. What's important is that portfolios are at new highs as well. And that is also starting to happen, I'm assuming, for many, because broader markets are rallying and they're also sort of putting in a lot of good work. So while large caps continue to do what they are, what matters disproportionately in some senses, especially those who manage their own money, is individual names, mid caps, small caps, etc. Look at individual stocks as well. Look at Z. It's more than making up for the loss yesterday. It was down 6 yesterday. It's up 8% this morning. So back at closer to 187, 188 or so. The other names are still there. I mean, Shriram Finance has cooled off a little bit. It went up to being 15% higher on the day at one point. At the day's high, it's come down a little bit, but still 8.5% rally. And Piramal is up about 10.5% as well. So those still remain the two big gainers that we've been tracking for you. Sonia.
Okay, so that is the big headline at the moment, right? The Sensex, the grand old index, has hit an all-time high, and it's hit that level of 63,580. Now, there are several reasons for this market to reach all-time highs. The economic growth, the macro data has picked up significantly over the last many days and months. There's been a resumption of foreign inflows as well in the month gone by. The corporate earnings have picked up across many sectors, and you've also had relatively stable global cues. So a lot of factors that have caused the markets to resume and reclaim rather the record highs. So Mitesh Thakkar is joining in, so let's get a quick word in from him. Mitesh, these are historic times, right? I mean, every time the market hits an all-time high, you get a sense of, that jubilation. You get, there's, of course, this all-around positive feeling. But this time around, the action has been really in the broader market. So, I mean, the mid-cap index has been hitting record highs for a while now. What's your view? How are you approaching the Nifty itself, not just for the rest of the day, but for a slightly longer-term trade?
Yeah, so Sonia, I think one, you rightly mentioned that the mid-cap index is clearly leading the rally. In fact, I was surprised that we made an all-time high without the Bank Nifty participating aggressively. I wasn't, honestly, I wasn't hoping it, and that is why we have been, not trading the index. But clearly, the breadth is very, very exciting. I think that's where the breakouts are succeeding. You are seeing stocks move 5, 10, 15% on a daily basis, sometimes for many days in continuation. So I think traders should also position themselves with more bias towards the stock side. The good thing is that with the Nifty getting past the earlier highs, I think we can now look at 18,950, 19,000 as the near-term target, and maybe 19,250 as a slightly positional target. And till I think yesterday's low of 18,650 breaks, I think the trend will be on the upside. So these counters can be very clearly inculcated in your trading strategy. But trading, as I said, I think is focused on stock-specific basis. The calls that I have right now, a buy on Bank of Baroda and a buy on Sun TV. Bank of Baroda was a recommendation earlier as well. Now would recommend buying it afresh with a stop at 192.5 for targets of 205. And Sun TV is a buy. Keep a stop just below levels of 444 here and look for targets of 465.
Thanks, Mitesh, very much for that. So those are the calls that you could go with. By the way, the reason why today might just be Nifty's day with the all-time high or date with the all-time high is that today you don't have any major sector that's dragging on the way down. Today, banks are finally participating. IT is also doing, its own thing on the upside. Reliance seems to be pretty okay. You don't have, barring metals, which is where the weakness is, you don't have too many big drags. There's some selling in pharma, but that doesn't matter from an index perspective because of the weightage. So yeah, Reliance is holding up, Bank Nifty is holding up. ICICI Bank, Kotak, these are the two ones which are kind of fence sitters. So if you pull up three stocks, Infosys and ICICI Bank and maybe a Kotak, these are the fence sitters. So yeah, either of them, give a little bit of a push on the upside. And we know what that means for the index. But anyway, that's about a 23 point.
Since we started talking about all-time highs, the distance
has
increased.
It's a jinx, Prashant. I think it always comes back in.
We were speaking with Rajiv and we were having a couple conversations. The market crept up, right? 20 points became 50, 55. So we'll give it a break. We'll address it when it happens. The Sensex has done it. The Nifty, it's almost there. We'll take a quick break here. We'll come back and we have Manisha joining in with all things commodities. So stay tuned for that conversation. And we are back with some stocks you need to focus on as well. Stay with us.
This is the best gift to Mumbaikars. Thanks to Maharashtra government. Thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 160,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two metro lines start fully functional, there will be huge relief. Once all these 8 to 10 lines are completed, which are going on right now, we will be creating a carrying capacity in Mumbai more than 1 crore passenger every day, plus suburban trains 40 lakhs. So I think there will be no congestion in future in Mumbai. Second thing, every time we face that, we see whenever there is an unprecedented rain in Mumbai, all the locals come to the standstill. Fortunately, the metros, majority of the metros, 70% metros are elevated, only 30% metro part is underground. So even during the flood, severe flood, the Mumbai will not come to standstill.
Today, Mumbai Metro 2A and Mumbai Metro 7 have partially decongested the notoriously jam-packed Western Expressway, have helped ease traffic.
All right, big day for the market. The Sensex has hit an all-time high and reclaimed its all-time high, territory. The distance to the top for the Nifty is less than 26 points. So we're virtually at those levels. But let's take a bit of a breather from equities and talk about the commodity markets now. Manisha Gupta is with us. Manisha, what's the one commodity that you're looking at today?
Sonia, I'm looking at the metal space, and that doesn't seem to be participating in this rally today because we've seen overnight going for a profit taking for many of these metals. One, the China rate cut at 10 basis points is much lesser than what the street was anticipating, and is the reason you've seen nearly 2% of decline come in for the zinc prices. Almost all metals, including steel, copper, aluminum, fell between 1 to 2%. In last 1 month, we've seen the zinc prices decline by 2.5%, and in last 1 year, 34% of a decline is what we are working with. I'm focusing on zinc because this is very close to its cost of production now. So an all-time high of last year at $4,896 per ton is what we hit. Last month was a 3-year lows at $2,200. Currently, we are trading below $2,400 right now. But the point I'm trying to make here is that the cost of production for zinc is at around $2,200. So we're not too far away from those kind of levels. And zinc clearly has been an underperformer within the metal space. We have seen the sharpest of declines come in for this one. The reason being that you have weak demand, the rising smelter supply. There is weak demand for steel as well. So the galvanizing industry also has seen a big sharp decline there. And that's weighing onto the markets. And then the weak mine profitability also has led to lower production there, especially when it comes to mines. There are various reports on how minings are cutting their production, putting it on maintenance, halting overall production as well. And a couple of these reports clearly are coming in from the Swedish producer Boliden, who's put their Irish operations on hold since June 13th. That is when we saw the zinc prices gain up by 5%, but that was very short-lived. The recent closure comes in for Tara zinc mine in Ireland as its cash flow has turned into negative. And these are just a couple of the events that I am mentioning because these numbers are on the bigger side. But there are a lot of mines which are actually getting shut down right now. This is what we've seen in sense of global treatment charges. This is the price that mines pay to smelters to convert their concentrate to refined zinc. And this price has been increasing over the time. So this clearly has turned not profitable for the mines as well. And is the reason you have seen more raw material, more concentrated zinc than the refined zinc there. The China, in the meanwhile, seems to be stocking up and they are hoarding in more than they really want. So when you look at the production for refined zinc, we've seen 13% of increase in this year. And this is over and above 21% of an increase that we've seen in the first 4 months also. When you look at the LME contracts as well, here also the short positions have continued to grow. 10,000 contracts at shorts right now. So there are new shorts being built up. Even as the commodity is oversold, the momentum still on the weaker side.
All right, Manisha, thanks very much for that. So that's commodities in focus. Now, Prime Minister Modi, on the first day of his state visit to the US, met members of the Indian diaspora in New York, who greeted him with vibrant celebrations, including music and folk dance performances. The Prime Minister also met key US CEOs and thought leaders, including the Tesla chief Elon Musk, who believes India is a great ground for solar energy investment. He remains optimistic about announcing an investment in the country very soon. Prime Minister Modi also met prominent investor Ray Dalio, physicist Neil deGrasse Tyson, and financial market analyst Nassim Nicholas Taleb.
I think there's a tremendous amount of potential for all three pillars of the sustainable energy future. The three pillars being sustainable energy generation through solar and wind primarily, and obviously India is great for solar, the amount of land area you actually need to generate enough electricity to power India is very small. I believe it'd be probably 1 or 2% of the land area of India. So it's very doable. And then you need to pair that with stationary battery packs because the sun doesn't shine at night. And then you need electric vehicles, and then you have a sustainable energy future. And I think it will, the interesting thing people will find is that this is a lower cost way to go as well. That may surprise people. And we're also hopefully looking forward to bringing Starlink to India as well. So, the Starlink internet, which I think can be incredibly helpful for sort of remote or rural villages where they perhaps either may have no access to internet or the internet is very expensive and slow. He did. Yes, I'm tentatively planning to visit India again next year.
Prime Minister Modi is a man whose time has come at the time that India's time has come. The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it and the popularity to transform it. So I think India and Prime Minister Modi are at a juncture in which there's going to create a tremendous opportunity, tremendous changes in India that are going to be really startling.
Okay, that's the big event underway, Prime Minister Modi in the US. And through the course of the day, of course, we'll be getting you snippets of all the conversations that are taking place there. For now, let's take a quick break. On the other side, we have a special segment. It's The Economy. Don't go anywhere. Lata will get chatting with Dipali Goenka of Wellspin India and Ajay Sahai of Federation of Indian Export Organization to talk about the export data for the month of May. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 570.
Welcome back. The Nifty is teasing us. We came within striking distance and now it's shied away a bit.
but the big moment will come anytime soon. Let's concentrate on the ambience, the export sector. India's goods exports actually have been falling in every single month of 2023. Most of the big individual contributors like engineering goods, textiles, gems and jewelry, chemicals, petroleum products have also been falling between 5 and 25%, as you can see. Electronics exports have been a brilliant exception, but they are still only about 5% of our total goods exports basket to make a difference. How is the road ahead for Indian exports in the current year, particularly for textiles, on which the domestic economy depends a lot? I have two experts, Ajay Sahai, Director General of the Federation of Indian Export Organizations, FEO, and Deepali Goenka of Welspun, one of the most prominent textile exporters out of India. Deepali and Mr. Sahai, good morning and thank you very much for joining us. Mr. Sahai, first for the big picture. Is this export fall only due to price falls because a year ago many things were more expensive, or is there a volume drop also in our exports?
So in fact, if I evaluate the data of the ports data clearly shows that their handling of exports and imports volume has gone up. So I will attribute it more to the drop in the prices, because we just did an analysis, quick analysis of the drop in the month of May, which was around 10%. Out of that, the drop in crude prices, which was reflected in the petroleum exports, alone pulled down the overall export figure by 6%. So I think it's more on account of the drop in the prices. Maybe in the individual segment, we may have seen some drop in the quantity, but when I'm looking into the port data and the airport data of the volume handled, I think on the volume side, we are perfectly okay.
Okay. No, that explanation fits definitely for petroleum. But like a table that just ran, we are doing less even in terms of engineering exports. That's down about 9-10%, 6% Jan to May. Textiles is down 20%, gems and jewelry 20 to 25%, and inorganic chemicals down about 12%. So it looks like it's run across and maybe beyond price. But I'll come back to you on that. Deepali, what are your thoughts? Your own numbers in the fourth quarter were fairly good, but are you sensing destination countries exporting less?
So I think, Lata, to that extent, I'll tell you, India lost a couple of points, if you look at your textile data last year, mainly to Pakistan in towels and sheets. And it was owing to cotton prices, commodity, and the freight costs. But this time in quarter four, we gained phenomenally by to 7.5% in towels and 3.5% in sheets. And we see that coming back, Lata. I think the commodity prices have sort of stable down, and the freight costs, which went up 80% year on year, now, it's come down tremendously. I think we'll see that kind of a ripple effect coming in. And because, there was a freight disruption that happened, at the front end and the point of sales of the retailers, there was a glut of inventory. And that inventory now sort of is stabilizing. And the quarter one is that stabilizing factor, as the retailers will take offtake of inventory from India for preparation of the holiday season. That happens in their quarter four and our quarter three as well.
Okay. Have you already heard from any of the, purchasing organizations? Do you think that in the second half of the current year, the stocking pressure will be as good as last time? Will it be better than last time? What are the early trends, Deepali?
So I think let's just talk about, first of all, United States of America. It actually is 30% of the consumption of textiles in the world, right? And we saw that, the quarter one for United States expanded at 2%. Inflation was 5%, lowest in the 22 months. We see that, there will be that kind of an impact and that offtake that will happen in United States of America. I'll give you a small example. A young girl working in New York stays out of Charleston, 4 days in a week, and 3 days or 2 days she commutes to New York. This is the new era of the working age that's come into United States and all over, because working from home has become predominant. The costs of the cities has gone absolutely high. So, you know, America in short has become, it's a resilient economy. So you will see that kind of a
So
thing
you're
come back.
expecting demand from America, but you know there is this talk of recession, and the numbers actually have shown a drop, especially in textiles, 20%. So are you confident that in the coming months, like what you can see in the next quarter, July, August, September, do you think we can reverse this?
So Lata, I'm just going to say something. We are cautiously optimistic. I think looking at the world, which is so dynamic, you know, in the way the trends are right now, we see, and we will take a trend, you know, we have taken a position of being cautiously optimistic. To your question, I'll say the Q1, Q2 are the time, you know, years, you know, the time of the years that we prepare for the holiday season. So you will see a slight uptrend here. So we will we will see how this export picture tends to pan out. But I can say that India is in a good position, and we tend to be cautiously optimistic here.
And you know about the festival season stocking, what, by October or earlier?
That already has started and begun, because, you know, we already planned the supply chain for textiles is 6 months ahead, right? So Q1 and Q2 is the time that we prepare for the holiday season, and the shipments happen in the Q2 for the preparation for their Q4 of the United States, right? Yeah.
And you can sense the orders coming this year.
At the moment, Lata, but yes, the world is moving towards a very dynamic trend. So I must say that, cautiously optimistic again.
Okay. Mr. Sahai, what about the other, you know, the big contributor to exports is engineering exports, and that has shown about a 20% fall, if I'm not mistaken, Jan to May. Is there, no, I think not 20%, it's much less, it's about 6%. Do you think over there we would be seeing better? And chemicals, those are the you know, manufacturing exports. How are we doing there?
No, in fact, I think these two commodities, they definitely depend on how the global economies and how the big countries are doing well. As of now, we are feeling that except for export to Europe, where the volumes of orders have come down, for the rest of the destination, we are not facing any challenge. For Europe, it's not that orders are not flowing, but the volumes have drastically reduced. We are hoping that from the third quarter of this calendar year, probably we will have better volume flowing from the Europe also. For apparel, for the engineering sectors, because some of the important components are the raw material kinds of thing, and with countries like China, just now they are recovering. Once that happens, probably the demands of raw materials will go up. We also have some kind of restriction in the past on exports of iron and steel also, which disrupted the market. It will take little time to gain the market. But overall, we feel that probably from the quarter from July to September, we will have better number. One positive of all these numbers is that even in the worst of the scenario, we are clocking around $35 billion exports in a month, which is much more than $30 billion, which we used to achieve in 2 years back. So overall exports are improving, and particularly in the electronics sector, we are doing extremely well. If you look into the electronic sector, still in the month of March, it clocked around $75 billion growth. Last year, we ended $25 billion. I'm looking at export of close to $40 billion, and even much more for the electronic sector, because even in the mobile sector in particular, we have doubled our exports in last 2 months alone.
No, electronics exports is doing... Yeah, Dr. Sahai, electronics exports doing brilliantly well. It's 50% higher if you took Jan to May. That point is taken. But it is still only 5% of our total export basket. So you're confident that we would be doing 35 billion in the coming months as well?
No, absolutely. We will be much more than that. The short point which I'm making is that we are making very conscious effort to move to a technology-driven sector, because they are now accounting for 1/3 of the global imports, and our share in that segment is less than 1%. So we have a long way to go. We have definitely now increasing our exports in electronics and machinery. Probably very soon we will have the similar kind of exports happening in the electrical sectors also, because in the PLI scheme, we are covering all the segments. And once this production starts commencing in this segment, it's not only the mobile today, other electronic sectors have also done well. Very soon we will have similar trends coming in machinery and electricals also, and maybe drugs and pharma as well.
Okay, yeah, drugs and pharma is the other one that's done a steady number. It's not huge, but it is a good 6% higher. Those are the only two items where Jan to May our exports are higher. Electronics, of course, up and away, and drugs and pharma about 5-6% higher. Dipali, final question to you. Are you saying that you've already started getting orders for the festive season? And if you have to compare from year ago levels, how much higher may that be?
Lata, last year was an aberration, and it'll not be right to say anything right now, but the offtake looks definitely better than last year for sure, because I think the freight, the energy basket, and the overall scenario was a little gloomy last year.
Okay. All right. Yeah, of course, we were in the shadow of a war, and therefore perhaps there wasn't so much of buying, and certainly traffic was disrupted. It may be much better. Maybe we should touch base with you all closer to time when the festival season is more underway and get a rain check. Thank you very much, Dr. Sahai and Dipali, for actually brightening up spirits that the goods export, services exports are doing well. Goods exports are likely to at least continue with a 35 billion monthly run rate. We are wrapping up on Bazaar with a minor disappointment that we thought this 18,887 will hit in the first hour. It's just about 20 to 25 points away. Perhaps Chartbusters will have that luck. That's coming up for you after the break.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two metro lines start fully functional, there will be huge relief. Once all these 8 to 10 lines are completed, which are going on right now,
CNBC-TV18 Newsbreak confirmed as Piramal Enterprises sells its entire 8.5% stake in Shriram Finance. Both stocks surge on the back of that. Aptis Value Finance corrects after 90.5 lakh shares on nearly 2% equity changes hands at an average price of 250 rupees per share. Rail Vikas Nigam Limited said yesterday's losses after the company clarifies that its MOU with the Russian firm over Vande Bharat project is still valid, also as that deliberations on the changes of terms are currently underway. A big surge in Zee as news reports suggest that Zee's merger with Sony is still on despite allegations on fund diversion by promoters Subhash Chandra and Viniti Goenka. Subros surges for a second straight day. Stock rallies over 12% after a 20% move yesterday as the government says air conditioners will be mandatory in truck cabins from 2025. You're watching us here on a fresh new edition of Chartbusters. I'm Mangalam Malu, and it's again another day of so close yet so far. For all practical purposes, we went closest to the all-time high in today's trading session. The Sensex, the grand old index, went ahead and hit a fresh record high as well. The mid-caps are flying away. Another record high on that index. The mid-cap index up around 1%, 360 points on that index at the high point of trade. Nearly 2 stocks advancing for 1 declining. The question is where we go from here, and that's a question that is best posed to our technical expert. Sony Patnaik joins in for a quick check on the market. Sony, very close to a record high. For all practical purposes, we're there, but this congestion of 18,850 to 18,900 continues. What do you think will it take for the market to break past this? Will it be during the day, or will it usually be an opening sort of gap up record high according to you?
Thank you, Mangalam. Good morning to you, and thank you so much for having me on the show. Good morning to all our viewers. So if I have to look into the setup for Nifty, this week we started at put writers forming a base around 18,700, 18,800 levels. 4 days into this week, and the story still remains the same. What has changed is how call writers have shifted their base. So call writers at the start of the week, they started with 18,800 as a base. But right now you can see the shifting in the position for the call writers to a 19,000 level. So this gradual shift in the call writers position is actually indicating that Nifty has formed, it's holding on to a very strong base of 18,700 to 18,600. And it has formed that base whilst the call writers shifting the position. So it is creating a space for Nifty to test 19,000. It should likely happen by this, June expiry. And to support this data, you've got India VIX, which has been hovering below 12. So it has been 15 straight trading sessions where VIX has been hovering below 12. Your long-short ratio has been more than above 45% for 25 plus trading sessions. Even if you note down the India, Nifty's PCR, so that has also not fallen below 0.85 for 20 plus trading sessions. So all of this positive data put together is actually indicating that the congestion do remain at the all-time high, but that is most likely to be broken by this June expiry end. So you would see Nifty heading towards 19,000 level. So it would be Bank Nifty that will help Nifty definitely, and IT is something that need to be focused on. So both of these will act as stimulus for Nifty to test and head towards 19,000 level by June expiry.
All right, June expiry is where you see 19,000. That's a good call coming in on the frontline index. Individual stocks, no complaints about the way the portfolio stocks have been rallying for all those who invested in the market. So they would be happy that, even if the Nifty is not hitting a record high, at least their portfolios are doing extremely well. All through this year, we've seen a near 12% rally on the mid-cap index, more stocks gaining much higher than that as well. Your thoughts on individual stocks? What should your picks be?
Right. So I have 2 top picks, both on the buy side. One would be your Intellect, because I just mentioned how IT should be supporting Nifty. So it would be Intellect to buy with a stop loss of 600. It can actually test 645 to 660 levels. So this is the first stock idea. And the second would be to buy ICICI General Insurance. With a good stop loss and a support, it has formed around 1300. So you can see if it holds 1290 as a stop loss, it can actually test 1290, sorry. So it can actually test 1370 to 1400 odd levels also. So these are the top 2 picks that I have for.
All right. So ICICI Lombard as well as Intellect Design are the stocks that Sony recommends. With that, let's move on and get you some more ideas for profit This one comes in from our colleagues at Money Control Pro, and today we have Anubhav Sahu joining with the stock. Anubhav.
We recently reviewed leading oleochemical company Galaxy Surfactants. Now, in the recent past, it has been impacted by a score of challenges ranging from subdued demand in Europe, currency volatility in Egypt and Turkey, and channel inventory in the US. Now, some of these issues are on mind, which makes it worthwhile to look at the stock. Now, channel inventory in US market is expected to normalize in say 1 to 2 quarters. In case of Egypt and Turkey, management is seeing some signs of demand stabilization. Secondly, domestic market, which makes up more than 1/3 of sales, remains a bright spot. Now here management has guided for 8 to 10% volume growth in fiscal year 24. We believe the demand would be largely urban-led, though there are signs of revival in rural areas as per FMCG players' commentary. Further, prices of the key raw material, fatty alcohol, has significantly dropped over the last 1 year. Now, this is expected to keep the prices of high-margin specialty product more reasonable, which should help in better offtake. Finally, stock is trading at a reasonable valuation post-consolidation in last few quarters. And hence, we believe investors should look beyond the current softness in international demand and accumulate it.
All right, so that's the view coming in on Galaxy Surfactants. Just keep an eye on a couple of stocks before we slip into a short break. A big move is what we've seen on Piramal Enterprises already, and that extends. So the stock is up almost 14% HPCL from the broader markets also has moved to the high point of trade. Take a short break, come back. We get chatting with Mahindra Kumar Dhanuka, who's the Vice Chairman and Managing Director of Dhanuka Agri-Tech. And this as the company, will give its business outlook as we've seen a bit of a delay in the monsoons.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14, I think it was 570.
Welcome back. You're watching us here on Chartbusters. Let's talk about the impact of monsoons, the delay of monsoons that could have on a lot of these agri-related companies. The onset of monsoons have been delayed across the country, resulting in later sowing and higher inventories for agrochemical producers. During a similar low and delayed monsoon period a few years ago in FY15 and 16, agrochemical producers actually saw low volumes and had to undertake a lot of price cuts. Is that going to be the case this year as well? And the impact of slower monsoon? We have Mahindra Kumar Dhanuka, who's the Vice Chairman and Managing Director of the company Dhanuka Agri-Tech, joining us now. Thanks a lot, Mr. Dhanuka, for joining in. And that really is the first question. You know, there has been a slow onset of monsoon in the first half of the monsoon season. The second half, there are fears of El Nino coming in. So what does that do to a business like yours? Do you think there would be a pile-up of inventory and you'll have to take price cuts going forward? How has demand been so far?
Definitely, the monsoon impacts the agrochemicals companies' sales and growth plans. And in India, we have only 40% irrigated area and 60% is still rain-fed. And if rains are delayed, overall sowing is delayed. And that's why the demand for the agrochemicals also reduces. Overall sentiments of the farmers are low because of the delay in the monsoon. But even if the monsoon comes now, then only 15 days delay will be there, which can be covered up by late sowing, and the only will be there that the yield will come late. So 15 days delay is not that significant in my opinion, and let us cross our fingers and pray God that because the monsoon depends the overall economy. India is an economy dependent, and definitely the monsoon plays an important role in the overall economy growth.
So far you don't see this as a situation similar to what we saw in FY15 and FY16, right? Where monsoons were below and the entire agrochemical industry took a bit of a hit. This is not a situation like that. There is a delay, but nothing really to worry, right?
Right now, it is not much worry, but if it is further delayed, then definitely the question will start for worry because of the further delay. Overall sales and the consumption will impact, and definitely there will be a big impact on the growth and sales plan of the agrochemical companies.
All right. What about the insecticides grade? We understand that channel inventory is extremely high out there. What proportion of your sales comes in from insecticides, and is this something that you're seeing in your product portfolio as well?
Yeah. In India, highest sales are for insecticide segment, while globally herbicides is the highest sales. And in our portfolio, insecticides and herbicides are more or less similar. Around 35% each of them is the share for insecticides as well as the herbicide in our portfolio. Channel inventory is definitely high because of the lower lifting of the chemicals during the Rabi season, and because of the easy availability from China, the global demand is less. America is having inventory for 1 year and Brazil is having inventory for 8 months. So that's why global demand is less, and it is easily available from China. That's why the prices are also reducing, and we are passing on the reduction of prices to the ultimate consumer, that is farmer.
So how much is the price reduction in this quarter been so far?
It depends product to product, and it may be from 5% to 25%.
On a blended basis, would you be able to give us a sense that overall on your portfolio, should we see like a 6-7% sort of cut, or will it be closer to 5%?
No, it will be even more than 10% in generics.
In generics, and that would be a blended, your entire portfolio would be how much?
50% specialty and 50% generic. So there is no impact on the specialty portfolio, only impact on the generic portfolio.
Okay, so that makes a blended cut of almost 5%, largely because 50% of your portfolio is generics and there's been no price cut in the specialty portfolio. What about your inventory? I mean, last quarter, I remember your gross margins fell by about 230 basis points. That was on account of some inventory provisions that you had to take. How is that situation for you right now? Are you sitting on a lot of inventory? Do we see some improvement there?
Not a lot of inventory because for the season, we have to gear up well in advance. We start manufacturing of the smaller packings from the month of January onwards because it is not possible to produce everything during the peak season time. We have around 400 SKUs. So smaller packings we pack during the off season from January to May. So that inventory is definitely there in the system. But considering the season, we have to keep that much inventory in our system to gear up for the season. So I can say that every month the prices is reducing, so that will have definitely some impact on the margins of the company. But overall, still the situation doesn't look to be panic, but we have to wait and watch and cross our fingers and let us pray God for the good monsoon in the rest of the season.
Yes, we all will join you in praying to God for good monsoons as well. But until that happens, do you still hold on to your earlier guidance of double-digit revenue growth in FY24 with 50 to 100 basis points margin expansion, or you would put that on hold and see how the next 15 days pan out?
Yeah, presently we will hold on to the earlier guidance, but let us wait the next 15 days, fortnight, that how the monsoon pan out during the next 15 days. And if it is reasonably good, then definitely we will stick to our earlier guidance.
All right, we will speak to you in the next 15 days as well. And finally, you know, your Dahej plant, which is coming on stream, was supposed to be operational in the next month. Is that happening, and will it break even this year? What kind of revenue are you anticipating this year coming in from the plant, given the weakness that we're seeing in the overall situation? And your 300 crore capex, you know, what will that be spent on over the next 2-3 years?
Out of 300 crore, around 225 crores would be spent by the end of this year. And overall, the project is on time, and we hope that the production will start from July onwards from the Dahej plant. Break even is not possible in the very first year. We have to take up the new project as a startup project, and it will take 2 to 3 years time to have the break even from the Dahej project.
All right, and this 300 crore capex you said will be spent in what? 225 crores will be in this year. Will that be in the Dahej plant, or will there be other plants that you are putting up?
No, in Dahej we have space for 10 plants. Presently we are putting up 1 plant, and we are waiting for some tie-up with Japanese company. So once we get the molecule from Japanese company, then we will be putting up more plant over there.
All right, thanks a lot for joining in, Mr. Dhanuka, and wish you good luck for this year. Also joining you and hoping that there would be good rains, not only for your business, but for the economy in general and for the benefit of our farmers and everyone, related. We all get affected by the monsoons in India. With that, let's take a look at the markets. Mildly off highs right now. The Nifty is sitting with the gains of just about 16 odd points, and its weakness really coming in from the Nifty Bank, which has continued to face some resistance at its 20-day moving average, and as a result of which the market back in the lower end of today's trading range. Take a short break, come back, get you more on individual stocks and the markets on the whole.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our...
Welcome back. Even as individual stocks are surging right now, the markets come off the highs. The Nifty is just about breaking into the red as we speak. But Blue Dart, that's the stock that has surged to the high point of trade. This morning, there was a note that came in from Motilal Oswal. They've upgraded the stock to buy with a target price of 8,040. And the reason why they say that is, one, the stock had already corrected about 30%, making it attractively priced. And remember, 40% of the company's costs are ATF or aviation turbine fuel, and that has seen a bit of a knock. So as a result of which, then margins will improve going forward as well. To add to that, they've added 2 aircraft in their fleet over the last year or so, and that will boost their volumes in the second half of this year. That explains why we've seen that big surge on Blue Dart. With that, we're out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment, because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year. It means the year which passed away just now. In that year, our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest.
Good morning, hello and welcome to Trading Hour. Well, it is turning out to be quite a volatile day. We have plenty to cover over the next 60 minutes. I'm Surabhi Upadhyay. With me, as always, is Pavitra Parekh. Pavitra, I hope you weren't doing the countdown. Were you doing the Nifty countdown?
I think I was, and that is why we've seen almost a break into the red.
Yeah, absolutely. I mean, look at the market on Nifty. It's barely up 3-4 points. Let's pull up the intraday chart. This is, let's forget the timer. At one point in time, we were saying about 12 points away. Now it's 67 points away. We need to look at the intraday chart because this is a very, very rapid decline that's come through. And in the last 1 hour, the gains have completely cooled off. Today, of course, let's not forget, it is the day when the Sensex, the grand old index, hit a fresh all-time high. We were thinking maybe the Nifty will keep it company, but no, not so at all. The Sensex has cooled off with the Nifty now threatening to break into negative territory. So where is the problem? Well, till about 10 o'clock, banks were supporting this market. And that's why it looked like maybe this is going to be Nifty's date with all-time high. But that picture has changed. Pull up the Bank Nifty chart, and you'll see the decline coming in over there as well. Apart from that, we'll get the contribution plate up for you. Metals are a weak side of the market. Some of the IT big boys like Infosys are not contributing. They're dragging their feet. Autos are seeing more profit taking. Those are the trends that we're talking about. The heavyweights are on your screens, the ones that are pulling things on the downside. So we have an ICICI Bank, ITC, etc. In terms of the sectoral action, the key Nifty losers, as I said, metals are down. So you've got a JSW Steel, a Hindalco. These are the weakest links on the Nifty screen. And autos, whether it's M&M, Tata Motors, Eicher Motors, a lot of these names, even Bajaj, Maruti, most of the auto stocks on the downside. So that's where the declines are. It seems with the auto index, market's going into reverse gear, Pavitra. At least for the time being, the bulls will just have to wait till they can get that they can touch that level of 18,887.
Oh, absolutely. I mean, right now it's around 55 points from the top for our own markets, and you have seen that slide. It's like Monday all over again, right? When we were 10 points away, and then we've seen that fall come through. The mid-cap index is doing its job, so that is holding up well, 0.8% higher over there. If you take a look, by the way, at the broader markets for this month, take a look at it. The mid-cap index is up 5.7%. You have the small-cap index, which has seen an over 7% kind of up move. So it's been a good showing from the broader markets, of course, like we've been pointing out, and today is no different there. A lot of the NBFCs in focus today. Shriram Finance, of course, we'll talk about, why later, but a bunch of the other ones as well. So L&T Holdings, M&M Finance, all of these doing very well. Those rates will be up on your screen. A lot of other stocks, doing quite well. Names like, okay, by the way, there is some news coming in that we are picking up on Lupin. It's got a US FDA approval for one of its drugs. The stock is picking up, so it's up around 2.3% right now. It is the first generic player to get approval for this big
Yeah. The reason the stock is reacting so sharply, Pavitra, is this is not just any other drug. Spiriva was one of the big trigger points for Lupin this year. And the fact that they've got this approval, I think we've got some Kotak estimates already. The global brand itself is about $1 billion. So it is a huge drug. And perhaps the fact that Lupin has the first mover advantage, I think they're the first generic players to get approval for this. That seems to be behind the huge run-up and this big sentiment boost that we've got on the stock. So Lupin in focus as well. But I think, in fact, we have Vivek joining in now. He can probably shed some more light on this. Vivek, tell us, look at the stock. It's flying away 3% on prospects that Spiriva can bring for the company.
What we are actually understanding from our sources is that, Lupin, it's a long pending approval, something that the street's been waiting for quite some time. We understand that the company has finally received the US FDA approval for the generic version of the Spiriva drug, which is used to treat asthma. Now, remember, Lupin is the first generic player to get approval for this particular blockbuster drug. And, it's a significant drug. The market size for this particular drug is quite significant. In fact, Kotak Institutional Equity Report estimates that the gross and net sales of this particular brand are close to $1 billion and $500 million respectively. And we reached out to the management. They are yet to respond to our queries at this point of time, but we understand that they've just recently received this particular approval. Now in Q4 FY23, all eyes and all analyst queries were directed towards the management for understanding when the company would actually be getting the approval for this particular drug. In fact, what the company told analysts was that, this is from the Q4 FY23 con call, they said that they are in active dialogue with the US FDA, and they said that, the target action date is now in July 2023 without inspection. With inspection, it could have been delayed. So it's coming slightly ahead of what the street was anticipating. The company also said that they're hoping to get the approval soon, and in fact, the US FDA had approved the drug master file for Spiriva in the first week of May. The company also indicated that a response from the US FDA in terms of a CRL is quite low. A CRL is the complete response letter that US FDA spreads to companies once they file for a particular drug. We also have an Antique estimate, Antique says that they're estimating the gross market size for the Spiriva inhaler drug to be close to $1 billion. And in fact, Antique says that Lupin's revival of margins as well as profitability are largely linked to key launches, key amongst them being G Spiriva.
Okay, got that, Vivek. Thanks very much. That's, of course, Vivek picking up this from his sources. So you're hearing it right here, first on CNBC-TV18. So Lupin is definitely a stock on our radar. Let's move to some others as well that have been catching the market's attention today. We're talking about CNBC-TV18 News Break getting confirmed. Piramal Enterprises has indeed sold its entire stake in Shriram Finance. Nimesh is back with us. Nimesh, you were alerting us about this block. It's happened. Tell us all the details.
As you rightly pointed out, there is an official communication as well that yes, Piramal Enterprises has sold its entire 8.3% stake in Shriram Finance today. So, and I guess that's the reason why both the stocks are buzzing in trade, almost 10% up on both stocks, and there are huge volumes as well. I'll come to Shriram Finance first, why the stock is buzzing. The simple reason the stock is up today is the fact that it's a clean out trade from Piramal Enterprises. Remember, in the last 1 week itself, nearly 11.5% stake got sold out in Shriram Finance. Last week, TPG sold out its entire 3% stake, and today Piramal has sold out its entire 8.3% stake in a block deal. The fact is that the block happened in the block window do suggest that there was a very strong demand and just at a 1% discount. I understand from sources in terms of buyers, one large sovereign fund was an anchor investor in today's block in Shriram Finance. I guess that's the reason why you're seeing a very sharp reaction in Shriram Finance today. But do remember, the stock is up almost 25% now in the last 1 week itself after two large blocks. So I was looking at some brokerage notes as well. Morgan Stanley is quite bullish on Shriram, and they have a target price around 1750. So it's largely come to those levels. So we've seen the large run up in the last 1 week. Now we need to see how the stock consolidates. But the big reaction is because it was a clean out trade and Piramal has exited. As far as Piramal Enterprise is concerned, that stock is gaining in trade largely because they were able to monetize this entire 8.3% stake. They've managed to raise for 4,600 crores. Remember, it's an NBFC and they're getting nearly 5,000 crores of liquidity by selling this 8.3%. The market cap of Piramal Enterprise is just 20,000 crores, and in one tranche they've got this 4,800 crores. So I guess that's the reason why even Piramal Enterprise is seeing a huge surge in today's trade.
All right, Nimesh, thanks a lot for getting us all of the details there. By the way, for the markets, we're around 10 points in the red now. The Nifty Bank has also moved into the red. By the way, for the Nifty Bank, it is almost a 200-point drop that we've seen from the top of the session. There you have it on your screen. So we are seeing, that pressure sort of creep into the market on the financials. But let's talk about, where we could be really headed on the markets from here. Vikas Khemani, founder at Carnelian Capital Advisors, joins us for exactly that. Vivek, thanks a lot for joining us. We have been talking about these all-time high kinds of levels because the Sensex did hit that record high level earlier in the day as well. But it seems like on the Nifty, we've been evading that a bit. It is playing a tease. Tell us, where do you think things could be headed from here? Because the banks have really been the sour point and they've not been participating in this move at all. Do you think we should expect that to change in the near future?
I think Indian market, whenever market gets closer to all-time high, it's bound to consolidate around that level, and especially when it has come out of such a skepticism kind of mindset in the markets over the last couple of months. But fact of the matter is that I think earning growths are fairly solid across banking, automobiles, IT, and capital goods, telecom. Pretty much most of the sectors have been reporting very robust earning growth, as well as I think liquidity situation has changed as the interest rates are kind of peaking out. And as interest rate changes, we all know that the liquidity towards emerging markets will come back. India will definitely receive disproportionately large flow of that money, and that drives the market in short term. So we've been seeing fairly large activity in the market. As you see the exchange of blocks, suddenly there's a lot of activity of the blocks in the market. So I think there is a bit of a change of money and happens around the all-time high level of market when the previous resistance level comes. But these are all technical factors. The fact of the matter is that India is one of the best phase of growth. India is, from all perspective, whether it is macroeconomic environment, microeconomic environment, the corporate profitability, corporate balance sheets, sovereign balance sheet, everywhere I think India stands out and is very solid. The sustainability of growth is, likely to be here for next, 3 to 5 years. So if that's the kind of environment, you will see liquidity remaining fairly robust, and that will drive the market from here also. Now, whether it remains here for 1 week, 2 weeks, 1 month, doesn't matter. For long-term investors like ourselves, we care for the direction, we care for the amount of money which can be made over a long period of time. And I think India remains one of the most promising places to create wealth.
Okay. Vikas, hi. Always great having you on our shows to chat. I was going through some of the recent newsletters and the notes that you folks put out at Carnelian. I know that you've been quite a big bull when it comes to manufacturing in India. And I believe there was, in one of your recent visits, you visited a company which makes, I think, either railway wagons or coaches, basically, something to do with railways. So tell us, is that one sort of element with which you're playing manufacturing? Are there others? How do you crystallize this down to stock ideas?
I think so. One of the first very good question. I think we've been seeing a very big change in the demand environment, and the letter which you're referring to, where we said demand creates supply. Basically, historically, a lot of people have been non-believers in manufacturing. People have said that India can't create scale, India can't build, efficient players, India is not good in R&D. Those kind of skepticism comes around, and we've been big believers that as long as there's a demand, Indian entrepreneurs are very smart, Indian engineers are smart, we have great talent pool, and which will rise up to the occasion and create the best quality in the world. And that is what this note was referring to, that, if there's a demand, Indian entrepreneurs will create world scale capacity, world scale quality, and which they've been displaying industry by industry. The metro coaches was just one example, but there are many more where I'm seeing companies are looking to get rid of the historical mindset and build global scale capacity, global scale organizations, not only to cater to the demand of Indian markets, but also to cater to the exports. And this is happening in the high-tech sector. It is not limited to only the conventional, the only labor arbitrage kind of thing. So this change of mindset, you will see more and more reflecting as the time passes. We've been believing this theme for last over 2.5 years. Our strategy, which we launched around this in October 2020, has been one of the best performing strategy. And the idea is to first we look at a sector where India holds a big tailwind, whether it is auto component, chemical, specialty chemical, garmenting, capital goods, or for that matter, toy manufacturing. And it's very, very wide sector where, either there's import substitution happening or there's export orientation. Combination of this, we have a massive, opportunity profile ahead of us. It is pretty much similar to what it was there in IT in mid-90s. So I see no different, and this is a decadal opportunity. So, idea, and there are many opportunities. It's very wide. So we remain very, very positive on that.
Okay, Vikas, got that. So the follow-up question is that, are you getting these stocks at prices that you like? Because as these opportunities are being discovered by the market, I mean, look at what's happened to stocks like HAL or some of these other Astra Micro on the defense manufacturing side, or even in HBL Power Systems. I mean, stocks that are very niche and they provide very niche manufacturing solutions. Is the price still enticing?
So again, look, there will be some sort of euphoria in certain pockets. There will no doubt on that markets. The thing is that initially there are very limited number of companies. So more and more people chase those kind of limited number of companies, and then euphoria or valuation gets built. Our approach is to remain sane, to sort of we definitely like business management, but also we are very valuation conscious organization. So if something is not making sense from a risk reward point of view, we walk away. We are finding right now ideas where we can comfortably say that they can deliver 20 to 25% kind of earning growth over 5-year period. And moment you see that, and at a reasonable valuation, we are getting lots of ideas around that. And also you have to see many companies are scaling up in a significant way. So you have to also have a bit of belief in the management that's where you have to have the trust and fact that these managements can deliver. So again, markets are forward looking, right? So you have to sort of assess what that can happen, going forward. So we are finding good ideas, good companies, in the space.
Okay, Vikas, would these be concentrated in some pockets, the fresh ideas that you are talking about? If you could at least take us through that. And also you said that, there are some pockets where perhaps valuations are just too high, so it doesn't make sense right now. What are the pockets that you would avoid purely based on valuations right now, even if, the space is looking good?
Sure. So I think this whole manufacturing space cuts across very large, wide variety of sectors. It is there in auto component, chemicals, specialty chemicals, garmenting, capital goods, consumer electronics, footwear manufacturing, defense, of course, and many more. And across the board, there are so many ideas, right? One sector where we feel a little bit of over enthusiasm is there right now around defense. Of course, defense is a very large opportunity, but if you are paying 100p or 80p for those kind of companies, in my opinion, makes no sense unless you are very sure about the potential opportunity of over next sort of 5 years, 10 years, and to that extent you are able to put up with that kind of scale up at a later date. But so one has to be very careful, about identifying ideas. I have no doubt that they will play. Many of the companies will play out, but also I have no doubt that many of the companies will fall on the wayside. Like we have seen in every sector, in IT, every company did not become big. In pharma, every company did not become big. In construction, many companies don't even exist around. In new tech sector, we don't have many companies are kind of not even being talked about now, which were kind of the hot companies. So one has to be very mindful of the business model, management quality, and of course valuation before any high promising sector you jump into.
All right. Okay. Wise words and advice perhaps worth keeping in mind. Thanks very much, Vikas, for joining in and giving us your perspective on the market. We do have to take a quick break on that note. On the other side, we put the spotlight on the sugar space. We'll talk to one sugar company, figure out what the demand-supply dynamics are like. And of course, we'll also have Manisha joining in to give us some more cues in the space.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made
Hey guys, welcome back to Trading Hour. Let's talk about the commodity space now, because one space that has really been in focus is the entire sugar pack. Manisha is joining us to tell us about that. Manisha, we have been reading about sugar prices rising, but what is this really on account of?
Well, yes, first of all, to give you a sense on the prices itself, and we saw nearly 3% of gains in sugar prices in the previous week, and now that makes up for 4% of gains in the month of June itself. Well, the global markets have been rising because you have seen fund buying coming in. It also has been about the El Nino now meeting its criteria, and El Nino basically means floods in Brazil and lesser rainfall in India, and both of these are major producing countries. Within India as well, we have seen slower progress of monsoon, and that has been a concern. We haven't seen the monsoon yet enter Maharashtra, and it hasn't entered UP as well. These are the two major producer states as well, and that has led to a sentiment gain into the markets. In the North Indian part of the country as well, the buying in sugar has been higher because we did see sugar prices slip in the previous week, and from there has been opportunity. Physical buying is what the markets have been reporting. In the global markets, we did see 11-year highs in case of sugar prices in the end of May, and the prices are keeping above 26 cents a pound even now as we speak. For the Indian markets, the last year's crop was at around 35.42 million tons. This season has seen a lower crop around 32.8 million tons, with almost no exports now for the foregoing season. And the next season, while it still is far away, but with the kind of sowing concerns, yield concerns, and remember, sugar is a water-intensive crop, and that all is leading to some sentiment buying into the prices.
Okay, got that. Thanks very much, Manisha, for all the updates there on the way the sugar situation is playing out for the time being. Now, to understand this further and assess the impact of El Nino on production and the demand-supply scenario, we have with us Vijay Banka, Managing Director of Dwarikesh Sugar. Mr. Banka, thank you for joining in. Good to have you on the show. So let's get the El Nino conversation out of the way first, and we want to get your sense on the impact on just the way the global price dynamics will shape up, because this is a global weather phenomena, and also here in India, what is happening with acreage right now, and what are the expectations if indeed we get a slightly deficient monsoon?
Very good morning. There is lurking fear of El Nino hitting the globe in the latter part of 2023. So, which means drier climate conditions in India and Thailand, the two major sugar-producing geographies in the Asian side, and wetter monsoons in wetter climate conditions in Brazil. So, both not conducive for the growth of sugarcane. So, we will have to wait and see. Although the meteorological department is upbeat on the normal monsoon, but well, the monsoon has been delayed. So if El Nino does happen, then it could mean lower production from India as well as Brazil.
How much of a lower production are you factoring in, Mr. Banka, and what do you think it will do to your volumes? Because, I mean, right now the prediction is that the monsoon could start maybe in the next 4 to 5 days. But what, as things stand right now, what could it mean for your volumes?
Well, if there is deficient rainfall, if there is deficient monsoon, so it's not going to so much impact the crop for 23-24 season, but it will definitely impact the season thereafter. But you see, we have over a period of time, we have become fundamentally a surplus sugar producing nation. So our consumption, even after considering, some decline in the production because of El Nino or other climate conditions, the same is going to be way above the consumption, Indian consumption. The lower production of sugar would only mean that the sugar which will be set aside for export will be lower. So the government is going to moderate that number. They will regulate the number if the production is lower. Maybe the export availability of sugar will be lesser. But yes, over a period of time, India has become very strong in the world market of sugar. Brazil, though, is the largest producer of sugar. But, they have their own challenges. They have, the other food crops production has gone up. So therefore, they have logistic issues. But, well, we will have to wait and see. It's too early to make any kind of, prediction on the price situation.
Got that, but let's talk about prevailing price trends as they stand right now, Mr. Banka. Manisha was just telling us, right? In April, the global market was so hot. We were talking about these 11-year high sugar prices. How did May play up? And now, we're practically in the fag end of June as well. So have global prices only inched higher? And then that brings me to the second part of the question. What about realizations here in India? What are the average realizations you're getting here vis-a-vis, let's say, exports to global markets?
Well, the global prices have been on a 11-year high, as you rightly mentioned. But they have found no resonance in the domestic local market because there is a cap on the export of sugar from the Indian ports. Government has had announced about 6 million tons of exports, which has all been physically shipped out. And there is no news of any further announcement of sugar export. So, it's not fully reflected in the domestic sugar prices. But having said that, I must add here that, while FY 22-23 sugar prices were flattish, we have seen some recovery in the sugar prices from April onwards. Prices which had ranged between 34.50 to 35.50 have improved. Presently, the prices are around 36.50 per quintal or so. So it does, sentimentally, it does impact the domestic market as well. And, perhaps the price rise is also triggered by the lurking fear of El Nino impacting the sugar production going forward.
Okay, so that's an important takeaway that we've seen prices firming up slightly to 36 here in India. You mentioned that, your volumes should be steady. How much are you exporting? I'm not sure if you are. But how much are you exporting? And in terms of realizations, will that show up in a better way in your margins and profits, say, in the coming quarters?
Well, last year, you see the export, whatever export has happened from India, it's happened by way of allotment of quota by the central government. So we have had our share of quota of about 86,000 metric tons, out of which we physically exported about 50,000 metric tons, and the rest was swapped in favor of domestic quota with a sugar mill based out of Maharashtra. So we will have to wait and see what is the basis that the government is going to follow for allotment for next year. Firstly, what quantity of export will be allowed, and secondly, how much will be allotted to us. There is a definite formula, of course. So we will have to wait and see how much they're going to allot to us and whether they'll allot a bigger number of export, a bigger target of export they will have. But as far as our company is concerned, we have been selling sugar in the domestic market as it is. Most of the sugar companies based out of Uttar Pradesh, since they are in the hinterlands, they don't. They are in a position of disadvantage vis-a-vis sugar mills based out of Maharashtra and Karnataka. So our crushing numbers are going up. Our production is also rising, and we are also doing ethanol in a big way. As of now, we are one among the very few fully integrated sugar companies in India.
Yeah. All right, Mr. Banka, thank you very much for taking us through that chat and what the coming year could really look like. We hope to have you on the show very soon again when we do have some clarity on where the monsoon could be headed and the kind of impact that it could have. That is the management of the Dwarkesh Sugars. We're going to get into a short break now, but when we return, we're going to discuss the markets. We're absolutely flat right now. Mitesh will join us for a quick check.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year,
Hey guys, welcome back. You're still tuned into Trading Off. The markets were absolutely flat, just around 5 points in the green right now. The mid-cap index is holding up, but that has come off the highs as well. It is around 250 points higher on the mid-cap index, and the banks just about managing to hold in the green. A lot of the pressure today coming through on the metal. So the index itself is down around 1.3%. But of course, the space has also run up a lot in the past few days. So do keep that in mind. Apart from that, it is a lot of the large private banks which are holding us back. So let's get a check on this market. We have Mitesh Thakkar joining us. Mitesh, we were once again counting down to that all-time high kind of level. That has not happened. It's awaiting us once again. And the banks really sitting out once more. Do you think with the banks sitting out, we should expect this kind of resistance to that level to stay for some time?
I think the key issue over here is, good morning, is that, the bank nifty, as you rightly said, is underperforming and is not participating on the upside. And that is clearly putting pressure on the nifty. So despite the fact that the index could make a new high, and that is partly due to the strength in the broader markets, I think we are not seeing a runaway movement post that. And I think the markets have again started cooling off during the day. I think overall, the index would be, and I'm talking about the nifty right now, would be in a slightly contracting kind of a phase, looking at the indicator situation. I think 18,950, 18,970 is an area which I think the markets will face difficulty to get past. And on the downside, 18,650 is the key level. Now, if the bank nifty decides to participate on the upside, then I think we'll see 18,950 being crossed, and then the nifty should and the bank nifty should both enjoy a strong movement on the upside. Else, it will be a range-bound movement for the next 3 to 4 to 5 sessions. Having said that, on the stock side, I have a buy on Exide Industries. That's a stock which has picked up very well in the last few days, making fresh highs on the 52-week basis and showing good continuation. That's a buy with a stop at 222, and I would look for targets of around 238 over here. And despite the fact that the banking pack is not participating, I have a buy on HDFC Limited, which is a constituent of the bank nifty. Today is showing some signs of reversal, so that's a buy with a stop at 2660 for a target of around 2730.
Okay, got that. Mitesh, thanks a lot for getting us those fresh ideas on the market. For now, we are going to get into a short break, but even as the market is absolutely flat, we have a whole host of stocks which are buzzing around in trade. We're going to tell you why when we come out of this short break, so stay with us.
Mangalam, there's been a lot of learning through many seasons of Mad About Markets, but there's one thing we haven't really learned about.
So many learns. It has to be the education sector, right? I mean, so much has happened.
Absolutely. The last 24 months, if anything, that has been the biggest learning for the EdTech sector. Starting with schools shutting down, everything going online, billions of dollars flowing in the EdTech industry, and then what?
Money being pumped out, people going back to schools.
Yeah.
And also,
the funding winter.
Companies, because of the funding winter, losing out or cutting out so many jobs. 9,000 people have been laid off.
It's been some learning curve, but we're talking about a $29 billion opportunity, and why that continues to attract investors. That is on top of mind. That's what we discussed this week on Mad About Markets.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives.
Welcome back. Well, the cool-off in the market continues, but we are putting the spotlight on individual stocks now. HDFC Life has been gaining after the CCI, the Competition Commission of India, approved HDFC's acquisition of additional stake in HDFC Life. Surabhi Sutaria is here with all of the details. Surabhi, explain this to us. So what happens now?
So, you know, they had received an RBI approval earlier. Now, the final approval, which is the CCI approval, has come in. Now, they've allowed HDFC to increase the shareholding in HDFC Life to over 50%. So, currently, they hold around 48.65%. Now, with this approval, the merged entity HDFC and HDFC Bank will have an shareholding of over 50% in HDFC Life, which just means more cross-selling opportunities for HDFC Life. Apart from that, Vibha from HDFC Life had joined CNBC-TV18 earlier, and she had indicated some positive, operating metrics for HDFC Life. She had said that HDFC Life has grown faster than the industry, approximately 1 to 2 times faster than the private sector. They also expect the VNB growth for FY24 to be in the mid-teens, which will be in line with the top line growth, and they will be able to hold on to their VNB new business margins, which is the VNB margins for FY24. So, positive commentary from the management, and along with the increased stake in the company, all of that is working in favor of HDFC Life.
All right, Surabhi, thanks a lot for getting us all of the details. The stock is one of the top gainers on the Nifty today. The other one which is doing very well is IGL. Sonal is here to tell us about that. Sonal, there's a note from Citi on this one.
Oh yes, so there has been an update for IGL because the Delhi government has extended the permit validity of taxis who are running on CNG and cleaner fuels up to 15 years. Now remember, there was a draft which was issued which spoke about electrifying the entire fleet, and that came as a threat to IGL because they are the main suppliers of gas in that area. But now this has come as a relief. Citi says that now Delhi government has stated that validity of permits is uniform over next 15 years, and these taxis can continue to ply on gas or CNG for that matter. And this draft scheme had sought to mandate aggregators to switch to all electric cab fleets within 7 years. So there was a draft earlier which spoke about electric vehicles being run in the taxi department, but that has not come about yet. So this comes as a relief. However, final aggregator policy is still awaited because there are disparities between the two, and there are still uncertainties as well. Recent correction improves risk reward for IGL as a stock. The stock is down 8% from the 52-week high level, but has done decently well so far in calendar year 2023. But this is a policy we'll be awaiting because that would be a game changer for IGL.
Okay, all right, got that. Thank you, Sonal, for the updates over there. On that note, we will take a quick break. On the other side, as we celebrate World Yoga Day today, we'll get you some special tips on improving your body's health after this quick break.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management, and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And
Welcome back. You're still tuned into Trading Hour. Now, air conditioner makers saw a dip in demand during the summer season, and there have been considerable changes in the market leadership as well. So, Surbi is standing by at the big wall to really tell us more about this and why we saw this kind of dip in demand. Surbi.
Large air conditioner manufacturers were optimistic about increased demand for their products due to the expected hot summer. But unseasonal rains have played spoilsport and added to the uncertainties. That, coupled with lower discretionary spending and intense pricing pressure, led to the tepid sales for these white good makers. The standout performer was clearly Blue Star in Q4, with over 20% revenue growth and more than 40% EBIT growth in the AC segment on a year-on-year basis. The next company which delivered a strong performance on both revenue and profitability front was Voltas. Whirlpool and Hitachi have struggled. Lloyd and IFB have seen some market share gains but struggled to turn profitable. Voltas has been the market leader for long, but it looks like the other players are now catching up, especially Blue Star. If you see the data from the last 3 years, on a compounded basis, in the large appliance segment, Blue Star has seen a revenue growth of close to 30% and profitability of close to 35%. Lloyd has also grown at a significantly faster pace compared to peers, but the aggressive pricing has led to compression on their profitability. Voltas, on the other hand, has seen slower growth when you compare it to the other two, with 20% compounded revenue growth and profitability growing at only 6%. Now, if you look at the market share in the last 5 years, Voltas has been gradually losing market shares. In fact, it has lost close to 180 basis points of its share, and Blue Star, on the other hand, has gained 120 basis points. Voltas has been facing intense competitive pressure from domestic and MNC players, as peers are investing aggressively on capacity expansion and strengthening their distribution capabilities. Voltas is looking at a hybrid model, adding own manufacturing facilities over and above the EMS model, but this will take time to reflect in their performance. The capex for manufacturing also seems to be substantially lower when you compare it to the peers. In the last 1 year, Blue Star stock has gained over 60% and Voltas is down 16%. So it looks like we have a new leader in the making and people are taking note of it.
Okay, Blue Sky, so Blue Star, got that. Surabhi, thanks very much. Very interesting comparisons and data over there. Thank you for giving us all of those details. We need to take a break, but up next, as promised, on the occasion of International Yoga Day, we'll tell you how you can get healthier sitting right on your office chair.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban testing.
Well, the markets have been stretching quite a bit between green and red. Right now, it's absolutely at the flat line. Nifty in no mood to get back to the all-time highs and, give the Sensex company today. So there you go. It's a very, very ranging action and very choppy kind of a day as well. That's what's playing out. But today marks the 9th edition of the International Day of Yoga, coinciding with the summer solstice. This day is perhaps a good time to remind ourselves of the importance of yoga, of health and balance in our daily lives. Now, those of us who work at a desk for most of the day will probably know how valuable small movements can also be for the body. So on this occasion of International Yoga Day, if you've missed your 2-minute plank at home, here are a few core-strengthening asanas that can actually be performed sitting right at your desk. So no excuses. Let's take a look.
If you're sitting for long hours at your desk, you develop a weak back and along with that, a weak core. So how do you strengthen your core muscles while you are on your chair? Tell us more. We are joined in by Yogini YouTuber Rashmi Ramesh. Show us some of the core exercises that you can do discreetly at work.
Sitting on a chair.
Yeah.
So one is one of my favorites, which is the boat pose, sitting on a chair. So just start to raise both your legs up.
Okay.
And then slowly, if you want to challenge yourself more, slowly raise both your arms up as well. Remember not to take back support, so don't lean back on your chair. Now, the longer you're able to do this, you'll feel it working on your lower abdominal muscles and also on your legs. So you keep your thighs really tight, you keep your toes pointed, and you just keep holding this. So we'll hold it for 5 counts, yeah?
Yeah,
keep breathing. 5, 4, 3, 2, 1. Nice.
I have a question. Will it give me 6 packs?
Maybe not, but it will give you good posture.
Perfect. Okay.
The second exercise that we're going to do focuses on your oblique abdominal muscles. So you get both your hands behind your head and fingers interlocked. And you raise your knee up, but touch your opposite elbow to your knee.
Sure.
So slowly, exhale and touch, inhale and center. Exhale and touch, inhale and center. Exhale, touch, inhale, center. Exhale, touch, inhale, center, center. Nice.
So this was a nice twist to the exercises, the core exercises that we're typically used to doing on a mat. Thank you so much for sharing these with us.
My pleasure.
All right, those are some helpful tips in case you're sitting on an office chair. Should we inspired to try any?
I'm trying. Maybe we should go to the studio.
Not discreet, discreet, but you know.
It's okay, it's all health. I think it's time for us to call it a wrap on this edition of Trading Hour. We'll go try our yoga poses, but you don't go anywhere because all the market action continues. Up next is Halftime Report.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 834, 89. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well.
Stocks gain with the BSE Sensex scaling to a new high. Utilities, realty, industrials lead gains. Financials too perk up, but metals drag.
Piramal Enterprises divests its entire 8.3% stake in Shriram Finance in an anticipated deal, but the trade lifts a cloud over the stocks. Both rally.
Sources tell CNBC-TV18 that Lupin is expected to have emerged the first generic player to get a nod to sell the billion-dollar respiratory drug G-Spiriva in the US. The stock jumps.
And HDFC gets a nod from CCI to up stakes in insurance arms. HDFC Life and HDFC Ergo to 50% each. HDFC Life perks up on the news.
Z Entertainment Enterprises gains after a report says that Sony remains committed to the merger. Aptus Value Housing slides after a large block deal, and Ather jumps on closure of its QIP.
Hello and welcome to Halftime Report. I'm Sonia Shenoy and with me is Mangalam Malu. Well, things have looked pretty good today. No two ways about that. The market may look very, very flat, but what we've done is hit an all-time high on the Sensex. The Nifty is, just within 50-60 points away from that all-time high. Of course, the lifetime highs have been evading the Nifty for a while, but the trend is generally on the upside, and you can see it in the broader markets. It's a phenomenal move that we're seeing across stocks, across sectors. The mid-cap index itself is up about 300 odd points. So all is not lost. I mean, nothing is lost as of now. The bulls really have the upper hand. But for the Nifty, I guess you have to wait a little bit longer before those all-time highs hit.
Hi, Sonia. Yes, just a little bit longer, but nothing really to worry about because a lot of stocks are hitting fresh record highs already. The mid-cap index, that's most important for, retail investors, those who are invested in the market through mutual funds, etc. as well. We've seen a big rally in the mid-cap index. The mid-cap index has hit a record high for 7 straight sessions, so that's a big positive. And the Nifty bank's facing some sort of technical resistance at the 20-day moving average, because of which we've seen a bit of a decline from the highs itself. From the highs of today, the Nifty is dipped about 40-50 odd points and currently has been sitting with gains of just about 15 points. The Sensex doing well, up 111 points. But let's talk about individual stocks and some important news that we're picking up from our sources. Lupin is the stock on our radar as it's got its US FDA approval for G-Spiriva. Our colleague Vivek joins in with the details of that one. Vivek, it's a big news that you've broken and the stock has been surging ever since.
Well, what we're actually picking up from our sources, and as you mentioned, it's an important development as far as Lupin is concerned. A very important approval that, both analysts as well as the company was hoping would come in from the US FDA sooner rather than later. We understand from our sources that the company has now received, the US FDA nod for the generic version of Spiriva. Remember, this particular drug is used in the treatment of asthma. Now, what we understand is that Lupin is the first generic player to get the US FDA nod. For this is a blockbuster drug. What it basically means as a blockbuster drug is the fact that the actual market size of this particular drug is pretty significant. As per a Kotak estimate, the gross and net sales of this particular brand itself are close to $1 billion and 500 million respectively. We reached out to the management of Lupin. They've not yet responded to our story. Just to give some context in terms of how important it is and what the company has been saying with respect to this particular launch. In the Q4 FY23 conference call with analysts, the company said that it's an active dialogue with the US FDA in terms of getting an approval for this particular drug. The target action date was now, had been pushed to July 2023. So, what we understand is, they've actually received it slightly ahead of what analysts on the street were actually anticipating that the nod would come through. Also, remember, the company had indicated that possibility of a CRL for this particular drug launch was quite low. A CRL is a complete response letter, which in itself is quite positive. Antique, in fact, who had written on, what is important for Lupin in terms of new launch pipeline, clearly mentioned revival of margins as well as profitability are largely linked to key launches, including names like generic Spiriva. So it's a significant development as far as Lupin is concerned. We'll wait for more updates.
All right, thanks a lot for that. So that's on Lupin. The stock actually is up almost 3.5%, reacting to that news flow. A big drug knot coming in for Lupin there. But here's a CNBC-TV18 news break confirmed. Piramal Enterprises has sold its entire stake in Shriram Finance. Nimesh is joining us now with all the details. Nimesh, over to you.
Hi, Sonia. So both the stocks, Piramal Enterprises and Shriram Finance, are buzzing in trade. Big moves in both the stocks. And the key reason is that Piramal Enterprises, which are owning 8.3% stake, have sold their complete stake. It's a clean out trade, and they've sold their entire stake in Shriram Finance today. I'll come to Shriram Finance first. Why that stock is buzzing in trade? Couple of reasons for it. One, because Piramal Enterprise has completely sold out, so it's a clean out. Two, the entire deal happened in the block window, which means the demand was quite strong. In fact, what I understand from sources, one of the leading sovereign fund was an anchor investor in Shriram Finance in today's block. So that's the reason why you're seeing a sharp reaction in Shriram Finance. In fact, in the last 1 week itself, we've seen two large exits in Shriram Finance. First, TPG sold out its entire 3% stake, and now Piramal has sold out its entire 8.3% stake, and hence we've seen a big move there. But do remember, in the last 1 week itself, the stock has rallied now 25%. That is Shriram Finance. So I was looking at some brokerage notes. Morgan Stanley is quite bullish on the stock. In fact, they have an overweight stance, but now the stock is now pretty much close to what their target price is. So one needs to take into account that the stock has already rallied 25%. But the key reason for the move is strong buyers have come into Shriram Finance, and it's a clean out trade as far as Piramal Enterprises is concerned. Now coming to Piramal Enterprises, why that stock is up more than 10% in today's trade? The simple reason is, with this clean out trade, Piramal has managed to raise close to 4,800 crores by selling this 8.3% in Shriram Finance. It's been in the works for a very long time. The fact is, the Piramal Enterprises market cap is currently to 20,000 crores, and as an NBFC to get nearly 5,000 crores of liquidity, that's a big positive sign, and hence we've seen a big reaction on Piramal Enterprises as well. Even from an NBFC valuation point of view, Piramal at close to 1.5 times price to book is still relatively cheap compared to the peers. So that's the reason why we're seeing a big reaction in Piramal Enterprises as well.
All right, Nimesh, congratulations on that news break. 10% higher on Shriram Finance and 12% on Piramal. But you have also poured through a bunch of brokerages, and you have a standout brokerage note that you've laid out for us today.
That's right. So, the standout note today was Divi's Labs. Yesterday, there was a note from Kotak Institutional Equities maintaining a sell on Divi's Labs. And today, BofA Securities has put out a note. They've downgraded the stock to underperform now from neutral, and they've cut the target price to 31.50. Now, the key reason why they've downgraded the stock is they believe that the street is much ahead in terms of earnings expectations, and that could be a bit of a disappointment going forward. And hence, they believe the risk reward is not favorable. Remember, the stock has rallied pretty hard in the last couple of months, and now the stock is sitting at close to 56 times FY24 price to earnings. So while there could be some improvements in terms of earnings in FY24, but it could be at a lower pace compared to what street expectations are, and hence there could be a disappointment, and that disappointment is not priced in at the current rich valuation. So that's the key reason why BofA has today downgraded the stock to underperform, and they've cut the target price on Divi's Labs to 31.50.
Okay, thanks a lot for that. Well, HDFC Life is gaining in trade after the CCI has approved HDFC's acquisition of additional stake in the company. Surbi Sutaria is joining in with all the details. Surbi, over to you.
Thanks for that. So RBI had earlier approved this increase in stake, but now CCI has come in with the final approval saying that HDFC can acquire additional shareholding in HDFC Life. So now currently they hold around 48.65%, but the merged entity will hold over 50% stake in HDFC Life. Now this will mean that HDFC Life will become a direct subsidiary of the merged entity, and their cost of distribution will probably come lower because they will have more cross-selling opportunities. Apart from that, the management had alluded to CNBC-TV18 earlier that HDFC Life has grown better than the industry, close to 1.5 to 2 times over than the private life sector, and they expect the VNB growth for FY24 to be in mid-teens, which will be in line with the top line growth, and also they will be able to hold on to their new business margins for FY24. So all of these factors are working in favor for HDFC Life.
All right, Surabhi, thanks a lot for that. A big move on HDFC Life for the last few trading sessions, and that move continues as well. But M&A consolidation likely to pick up in the consumer electric sector, with 2 large companies open to a controlled deal as per sources. Nisha Poddar joins in with exclusive details on that one. Nisha.
Thanks for that. Yes, sources with direct knowledge have shared with us, and I've spoken to quite a few players who have direct knowledge of the developments in the sector as well as some of the companies. So mergers and acquisitions and consolidation likely to pick up in the consumer electricals business is what we are gathering from sources with direct knowledge. Now, two companies which are looking like M&A candidates and are likely to be open for a control acquisition or a sale, complete sale of the company, are Crompton Greaves Consumer Electricals, we gathered from sources with direct knowledge, and in the unlisted space, but a big brand, Syska LED. So this is what we are gathering from sources with direct knowledge, and sources also do suggest that two companies look very acquisitive in this space and could be the consolidators. One is the market leader Havells, and the second one we gather is CG Power, which has ventured into this space in a small way but has ambitions to expand with inorganic growth, is what we gather. Now, looking at why consumer companies like CG Consumer Electric is looking for a complete sale, we do gather that they want management depth with a good strategic fit to enhance its performance, is what we gather. With the private equity players Advent as well as Temasek making their exit from the company, it is a very widely held company and the board will have to take the call on M&A. On the other hand, Syska LED has been struggling with a minority stake sale. I have gathered that private equity players have not been interested in buying out a minority in the company, and therefore they have shown interest in being open to evaluating a controlled deal, a majority stake sale, is what we gather from sources with direct knowledge. Now, remember, this sector is growing fast. Demand has been muted, volumes had dropped, but there are certain regulatory changes and raw material costs which do put pressure in some of the smaller companies as well. So consolidation could be a play, with these two big players having their specific reasons really for going the M&A way. So a lot of action is expected in this, and we did reach out to the companies, and CG Consumer Electricals did clarify that the board is not considering or evaluating any such strategic sale at this moment, and while Syska promoters have stated that it is just speculation, but we do have reasons, at least several sources have confirmed that they have been evaluating a prospect of control sale in both these companies.
All right, thanks a lot for that, Nisha. Appreciate it. Let's slip into a quick break. On the other side of the break, since it's International Yoga Day today, we chose to speak to a yoga enthusiast, Viniti Saraf Mutreja, who's also the MD of Viniti Organics as we know it, to discuss her business outlook and also chat about International Yoga Day and the life lessons that yoga has given her. Stay tuned.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our
Welcome back to Halftime Report. Well, just one word on the market. It's not doing much actually. It's absolutely flat. But we're still about, what, 60, 70 points away from this all-time high. So the market is gravitating around that 18,800 mark. But on the occasion of International Yoga Day, we speak to one corporate thought leader who has been a proponent and active practitioner of yoga for the last many years. Viniti Mutreja, the MD of Viniti Organics, joins us now. And those are some visuals, some stills of Viniti, practicing yoga over the last many years. Very, very complicated. Looks like she's been, an active practitioner. Viniti, thanks so much for joining us. We were having a chat with Rajiv Bajaj a couple of hours ago on the importance of yoga, and he told us about how it's helped him through the best and worst times in his life. Going by the pictures that you sent us, it looks like you've been practicing yoga for a long time. How has it helped you?
Yeah, hi Sonia. Thanks for having me here today. Actually, yoga, well, I have been practicing on and off, I would say, for many years. But quite honestly, really more religiously and consistently, my journey with yoga started during COVID. I think, during the first lockdown, a lot of us were going through anxiety, and especially I, and it was absolutely knew what's going on. Children are home, everyone, things work from home. And that's when I started yoga, properly. And since then, I must say the last 3 years, what a journey it has been. I have gone, as you can see this picture, I'm somewhere in Rishikesh doing yoga. I've tried aerial yoga. I saw you flashing some pictures of that, me hanging upside down. And now I have an instructor that comes home, practice it thrice a week. What I realize it does is, of course, it gives you flexibility, improves your strength. And every time after you play a sport or, do a gym workout, the next day I must do yoga. That's the only way my body stays flexible and your muscles don't stiffen. Apart from that, what it does to you mentally is, remarkable. I find I'm a lot calmer, more at peace. I sleep better. I can make, decisions at ease at work.
All right, we'll ask you about what decisions you've made recently about work in just a bit. But Viniti, you've been running a company as the MD of a listed company. It's difficult to make time for fitness activities, right? I mean, doing yoga thrice a week, and this is over and above the other fitness activities that you do. What do you advise to people who might be struggling with the time to do these activities?
No, I think 1 hour a day, 45 minutes to 1 hour a day on any form of fitness is a must. So, yoga is twice. The other couple of days could be a gym workout, could be a sport that you play, tennis or anything. And I think that 1 hour everyone can remove, especially today, when hours are more flexible. That is one thing that the last 3 years have taught us.
Is there a quick hack that you can give to all our viewers right now? I mean, these pictures obviously require specialized settings, yoga mats, and the beautiful locale of Rishikesh and all these places that you've been to. But for all of us who are sitting in cubicles, is there a special hack that you can give us that we can practice on a regular basis, even if we don't get that 1 hour?
Absolutely. Now there's so much online classes happening and online meditation happening. And even if you can just remove 10 minutes or 15 minutes in the middle of your work day to just sit, close your eyes, maybe chant the Gayatri mantra and repeat the word Om 10 times, I think the rest of your day can do wonders for you.
So, just one more question before we move on to business, right? I mean, as Mangalam was pointing out, time is a big issue. And I think for people like you who are trying to perhaps balance motherhood, work, exercise, I know you have 2 children. You were talking about how COVID was a very tough time for you because children were at home. I sometimes face the same issue. So I just want to understand that, can one really have it all? Or is it a struggle most times for people like you?
This is not a yoga-related question, but, but in any case, it applies for both, right? Men and women. And having that all, I think by all you mean a fulfilling family life, a fulfilling career, as well as good health. And we all strive for that. And, and why not? I don't see a career is worth it without good health or without a complete family life and vice versa.
Absolutely. And it's a struggle every day, right? I get that. Let's talk a little bit about the business because, the IBB space, wanted to understand. I mean, you continue to be a market leader there. But what is the demand looking like right now? There is, of course, some talk of a slowdown expected, especially in Q3 and Q4 or, in the later half of the year. But you tell us what is the outlook and what kind of growth do you think you can eke out for the business?
See, honestly, we spoke about a month back. And since then, nothing much has changed. Nothing drastic has happened. Q3 and Q4 last year, we saw a great pickup of demand in both our large segments, IBB as well as ATBS. And we are seeing destocking, especially in ATBS in Q1 and Q2. IBB has been doing all right so far, but I expect there to be a slight slowdown in Q2 and maybe pick up in Q3. Having said that, the other products are making up for this, such as butyl phenols, as well as some niche products that are doing quite well that go into flavors and fragrances. So I expect FY24 on the whole to be in line with FY23.
All right, FY24 is in line with FY23, but FY25 is where you believe that there could be some recovery for ATBS, right? Because everyone's believing that, a lot of the end users of ATBS have been destocking lately. Have you faced that? And of all the industries that you cater to, which is the one which is, facing the most pressure?
Right. In the near short term, yes, mostly coming from the oil and gas segment. But we are still going ahead with our ATBS expansion, which is expected to be complete by March. So the long-term outlook, when I say on annual, it grows in 2-digit, the demand for these products. That hasn't changed because one must realize that last year the product grew up by 35%. So, so that is why this year is flat. But if one looks at the complete picture over a 3-year horizon or a 5-year horizon, you do find a compounded growth rate of close to 15%.
You've also started commercial supply of antioxidants, and I think you're expecting that to contribute to your revenues from Q1 of this year. Can you tell us what could the contribution look like, not just in the very near term, but also, say, 2 to 3 years out?
Sure. So antioxidants is in the viral additives division. Yes. We are still waiting for the NCLT, the last final approval. We've gotten the shareholder approval, the lender approval, etc. It's just taking a bit longer than I expected. But once that is confirmed, then it starts adding to our revenue stream. The overall potential for those products over the next 2 to 3 years is, is on top of $100 million, close to 800 crores.
And that happens by when?
Well, to reach that capacity utilization, it will take us 2 to 3 years.
All right. And what about the butyl facility as well? I mean, you have viral organics, right?
Yes.
Which is MEHQ.
Yeah, butyl phenols is in Viniti Organics, and that has been up and running for the last 2 to 3 years. That's presently running at 60-70% utilization. In fact, that is what is making up for the lost sort of the slowdown in demand in in ADBS. That's doing all right. In Viral Organics, which is a 100% subsidiary of Viniti, that is where we will be starting our new products, anisole-based products like MEHQ, Guacol, and FOMAP. And that is also expected to come on stream by March 2024.
And what's the revenue potential there? And are these like high margin products?
These are low volume, high margin products. Revenue potential of those 3 to 4 products combined is about 300 crores.
Okay, all right, Viniti, all the best with the business, with the work-life balance, and also with yoga. It was great to see, your exercise and your practice over the last many years, and hope you continue to maintain and strike that balance. Thanks a lot for joining in.
Thank you.
All right, that's Viniti Organics talking about the business and life with yoga on International Yoga Day. You'll continue to see snippets of that interview through the course of the day.
She said that whenever you are, at work and you have no time to do yoga and all of that, you have to recite the Gayatri Mantra and chant Om 8 to 10 times. So do we hear a lot of people chanting in our office now?
I hope not on air. Maybe in your personal cubicle.
Yeah, during break, let's do that.
During the break. All right, let's slip into a quick break. On the other side of the break, we'll have Aditya Agarwala of Invest for Edu join in with some trading strategies. Do stay tuned in.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And
Welcome back. You're watching us here on Halftime Report. The Nifty meandering around that 18,830 mark. It's off the highs, but its date with all-time highs is still elusive. Let's see where that comes, because over the last few trading sessions, in fact, if we just take a look at it, Nifty in this month itself has gone very, very close to the all-time high of 18,887. On June 16th, it was 18,865. Then we saw a bit of a slip, 18,881, earlier on June 19th. And today itself is 18,876. That's the high of today's trading session. So just within 10 to 20 points of all-time highs, we see some bit of supply coming in. And that's the resistance or congestion zone for the Nifty, 18,850 to 18,900 odd. Today's weakness, though, can be attributed to the Nifty Bank facing technical resistance at the 20-day moving average. Because if you take a look at it, the Nifty Bank's high on in today's trading session was 43,947. Whereas the 20-day moving average, 43,965. So as soon as we see the Nifty Bank cross that, maybe then we can make a case of all-time highs for the Nifty itself. What this has meant for options is that, option writers believe that tomorrow, which is the weekly options expiry, we will see a range-bound trade. 18,800 put has a premium of almost 35 odd points. 18,800 calls also extremely active in trade today for a premium of 60 points. So it gives you a combined premium of roughly 100 points, with option writers believing that 18,700 to 18,900 would be the extreme near-term range on the frontline index. In terms of individual stocks, massive long positions added on Lupin, almost 12 to 13% sort of open interest jump. As soon as Vivek broke that story, the stocks moved to the high point of trade. So we'll track any development out here. And India Cements is the other stock that I'm looking at. It's moved to the high point of trade. We've seen open interest reduction on that. So maybe India Cements exits F&O ban in today's disclosures. So if that happens, then we can see some further moves on this counter.
All right, well, let's go across to Aditya Agarwal of Invest4Edu, who joins us on the show now. Aditya, hi, good afternoon. Well, the market is still struggling to conquer those all-time highs, but there are plenty of stocks that are sitting at fresh highs, right? So tell us about that. What are the stocks that you like even now, and where there is more upside expected?
Afternoon, Sonia. Thanks for having the show. Clearly, I believe it will take some time for the bulls to take out the all-time high. It's not going to be an easy task. We've clearly seen markets head closer to 18,800, 18,900, and clearly supply comes around 18,900. And I believe it will take some time for markets to cross that. Both on the Nifty and the Bank Nifty looks a little bit of a resistance there. But as you said, there are plenty of opportunities out there, and especially in the mid-cap space. The first stock that I've identified is Laopala. Look at the stock. It went into a consolidation phase, and now it's breaking out from that consolidation on very good volumes. It's a very attractive looking chart. So at current levels, one can go ahead and buy. Look for a target of 500 on the upside with a stop loss at 410. Offers you a good risk to reward ratio. The second stock is LIC Housing Finance. We have seen these whole host of real estate stocks buzz, and now it's time for these housing finance companies to actually chip in and show an outperformance. So LIC Housing Finance, as we speak, is almost trading at the high point of the day, broken out from a consolidation phase at current levels. Look a very attractive buy. Go ahead, buy for a target of 425 on the upside with a stop loss at 390 on the downside. It's a very attractive buy.
Okay, thanks a lot, Aditya, for that. Let's take a short break. On the other side, we will put our focus on Z, which is buzzing in trade this afternoon. If you're wondering why, do stay tuned in.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our.
Welcome back to Halftime Report on CNBC-TV18. Well, sources say that Sony has no plans to back out of the Zee-Sony merger, despite allegations of fund diversion, against the Goenkas. Surbhi is joining in now to give us more details on that. This, of course, has a big, this is causing a big relief rally on the Zee stock. Surbhi, over to you.
So there is a Mint report that says that Sony has no plans to back out of the merger despite the allegations of fund diversion. Now, Ravi Ahuja, the chairman of Global Television Studios and Corporate Development at Sony Pictures, had presented to the board of the parent company of Sony and the presentation went over the ongoing developments and the prospects of the merger. Apart from that, the commitment of the merger is primarily based on the parent company's opinion, and that at 250 per share, at Zee's valuation for the proposed share swap is unlikely to be affected even if the stock price goes below the 140 levels. Now, there is a plan for the worst case scenario, that is if Mr. Goenka does not get a relief from the courts to be the MD of the company, but as of now there is no discussion of that. As per the agreement, Goenka would be the managing director and the CEO of the merged entity for 5 years. Apart from that, there is a statement coming in from Sony. They say that there have been several erroneous press reports recently speculating about the future of Zee's planned merger with Sony following the interim order against Subhash Chandra and Puneet Goenka. And they say that they take the SEBI interim order very seriously and will continue to monitor developments that may affect the deal.
All right, thanks a lot for that, Surbhi. We'll talk about that, but meanwhile, just keep an eye on a couple of other stocks as well. Okay, Lupin, the CNBC-TV18 news break has been confirmed. US FDA has indeed given a nod to the company for Spiriva Handy Handler, which is Handy Haler, which is basically the generic version of the asthma drug Spiriva, and as a result of which the stock has only extended its gains. So we have a CNBC-TV18 news break confirmed. We can tell you, we told you first, and now it is official. The other stock which is surging right now is Blue Dart, and that's on account of Motilal Oswal upgrading the stock with a target price of 8,040 odd rupees. The reason why Motilal Oswal believes that this calls for a bit of an upgrade is because, one, nearly 40% of the company's direct operating cost is related to ATF. We've been seeing how crude prices have fallen and now are stable and have stabilized. So, ATF usually follows. That stabilizing would increase the company's margins. Apart from that, they've also added 2 new aircraft to their overall fleet. So in the second half of this year, the additional aircraft would boost their volumes. They expect the margins of the company to actually be around 13 to 14% as against 10 to 11% that they did earlier. So that would mean a margin improvement. And add to all of these things, the stock has already seen a correction of 30% from the highs. So all of that makes it an attractive pick right now. And Motilal is a buyer, the stock up 6.5%.
Okay, well, that's on Blue Dart. Keep your eye out on that. But let's do one thing. Let's take a quick commercial break and we'll come back with lots more on the market. Stay with us.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision